Informational hearing with the Senate Committees on Governance and Finance and Banking and Financial Institutions. We're grateful that you're with us here on this Thanksgiving week. Today's hearing focuses on the question of whether the state should establish its own public bank. This hearing follows up on a previous hearing from the Governance and Finance Committee on Assemblymember Santiago and Chiu's legislation from earlier in the year, which we held in August. The committee at that time had a robust discussion and debate with the commitment that we would take that deeper dive in the fall, and welcome to the deeper dive, ladies and gentlemen. The proposal that is in front of us, it's ambitious. For the state to establish its own public bank, especially in these challenging times, may prove to be difficult, but one that deserves our attention and the necessary hard work to wrestle with the complexities it presents. There is a potential here for doing good, which is why we're honored to join with Senator Bradford, the chair of the Banking and Financial Institutions Committee, along with his committee members to consider these issues. We are going to have 4 panels today consisting of assembly members and public banking advocates, state constitutional officers, as well as representatives from state agencies and industry stakeholders. We're looking forward to hearing today's testimony and wanted to thank everyone who has agreed to participate today, and we want to say a special thank you to each of the members for joining us on their Thanksgiving week. I would now like to cover some housekeeping items that will help govern today's hearing. In response to the COVID-19 emergency and to protect the public, legislators, and employees, we're going to have to limit non-essential gatherings and adhere to social distancing and face covering guidelines. In compliance with these orders, the Senate has made necessary adjustments to normal practices in order to ensure the public continues to have access to the legislative process. We're going to be holding committee hearings here in the Capitol or in the Senate chambers this morning, with some of our committee members participating remotely. Today we have 8 members participating remotely. We want to say good morning and welcome to Senators Caballero, Senator Hertzberg, our Majority Leader, Senator Hueso, Senator Hurtado, Senator Neilsen, Senator Portantino, Senator Wiener, and good morning to Senator Durazo. In the Senate chamber with me, we're grateful to see Chair of the Banking and Financial Institutions Committee, Senator Bradford, as well as the Vice Chair of Governance and Finance Committee, Mr. Moorlach. I would now like to talk about process for those who are participating remotely on Zoom today. Those who are participating remotely, please mute your phones or your computers. This is going to greatly aid in eliminating any acoustic feedback. And I ask that every time that you wish to be recognized, that you use the raise your hand feature in the program. Each time you're recognized to speak, a pop-up window will appear asking if you'd like to unmute. Please select the unmute before you begin speaking. We want to say thank you to our IT personnel. They're going to put you back on mute when you're done with your words. Once recognized to speak, please make sure that you can be seen on the screen, state your name, and then you will be ready to address the committee. To allow the public access, we've admitted members of the public to 2 hearing rooms to the extent that social distancing requirements allow, and we're also going to be using a teleconference service for those individuals who wish to testify to the committee today. If you'd like to be able to join us via phone, here is the phone number, and we welcome you to call 844-291-6364. If you'd like to be able to provide a comment via phone today, please dial, once again, 844-291-6364. The access code is 605-7653. For detailed instructions on how the teleconference system works, please refer to the State Senate and/or the committee websites. For today's hearing, we're going to be hearing all the panels of witnesses on the agenda prior to taking any public comment. Once we've heard all the witnesses, we'll have a public comment period for those who wish to comment on the topics on today's agenda. I want to make sure that everyone is aware we have a hard out of the Senate chambers at 1 p.m. due to the Health Committee today, so we're going to have to watch the clock, and Senator Bradford and I are not trying to be rude, but we will be keeping time for each of the panels. While every effort has been made to streamline the hearing process and conduct our hearings in as close to the same manner as is customary, there may be some lag times for participants who are adjusting to the new use of online tools or technologies. We're going to go slow but steady. It's going to be a great hearing, and again, thank you all for joining us. Ladies and gentlemen of the committee, and to those who are participating remotely, would now like to turn the floor over to Chair Bradford for Banking and Financial Institutions Committee. Mr. Chair, thank you so much for your partnership. The floor is yours, sir, for opening comments.
Thank you, Chair McGuire, for this opportunity to come before you in a joint process to discuss public banking. I want to thank all the witnesses who will testify today for your expertise. We're honored to have, as stated, 2 constitutional officers who will participate in this hearing, as well as Director of Financial Protection and Innovation that will provide their expertise as well. I also want to thank the Banking Committee members, Senator Caballero, Durazo, and Portantino, for joining us. Unfortunately, we're not going to be joined by Senator Hueso, an individual who's had a lot of experience of doing legislation during his tenure in the legislature on this public banking issue, so I look forward to getting his input in the future. I'm glad we're holding this hearing today. It allows us, again, to look at public banking within the jurisdiction of your committee, Mr. McGuire, as well as mine. And it's important, again, to hear what our witnesses have to say. As we know, COVID limited a lot of what we were doing last year. We didn't allow Senate banking to hear Assemblymember Santiago's AB 310 last year, so it's no doubt we'll see more legislation in this area in the coming legislative year. And I come, as well as my colleagues, with an open mind to hear the discussion that will be brought forth today. I've been a strong supporter of getting the state behind local community development and small business financing and other local infrastructure tools that help small businesses. As we know, not everyone and every community in California has an equal shot at economic success. Prime example is the number of unbanked Californians that we have that clearly demonstrates the need for other tools to be available to them, involving the state in a way that improves outcomes from an equity perspective is something that we all should be supportive of. A public depository could be one way to achieve that goal. It could also be that a non-depository state-run financial authority might be a better way to go as well. Again, I'm interested in hearing the pros and cons of both approaches, and I think this hearing will provide us some helpful information and allowing us to move forward next year. So thank you for this opportunity.
Mr. Vice Chair, we love working with you. Want to say thank you so much for your leadership, sir. Thank you to your committee, and always good to be able to partner. Thank you so much.
Thank you.
Mr. Chair. Ladies and gentlemen, we're now going to turn the floor over to the Vice Chair of Governance and Finance for opening comments. But before he does, we want to recognize Senator Moorlach. This is going to be Senator Moorlach's last Governance and Finance Committee meeting for now, and we want to take a moment to be able to say thank you to the Senator for his service and his hard work serving the people of California. Senator Moorlach is one of the most diligent members here in the California State Senate. He's successful at his job because it's personal to him. He reads everything, and I mean every detail in the staff report. He's incredibly hardworking, and he's dedicated to the job here in the Senate. He's always curious. He asks some of the most intelligent questions that I've seen in our committees. He's always on time, and in fact, many times he's the first person in the room. He's always prepared. And I don't know if you know this, but he's also a CPA and the former treasurer, tax collector in Orange County. He's open-minded, and one of the things I appreciate most about Senator Moorlach is that when there is a challenging issue, you could always go to him to be able to make a case. Senator Moorlach, we are going to miss you, sir. You have been wonderful to be able to work with each and every day, our time together on governance and finance. Not only have I enjoyed our conversations, I've enjoyed our partnership, truly. And as I said to you here a few weeks ago, I am just so grateful for the time that we have spent together, sir. Before we turn it over to you, if it works, through Senator Bradford, the chair of Banking and Financial Institutions, I'd like to be able to turn it over, and I know this is a bit extraordinary, to Colin Grinnell, who's the Chief Consultant for Governance and Finance, to be able to say a few words as well, and then we're going to turn it over to Senator Moorlach. Mr. Chief Consultant. If we can recognize the Chief Consultant in the back, please.
It's been a, am I on? Okay.
There we go.
Senator Moorlach, I just wanted to express on behalf of the staff of the Governance and Finance Committee our appreciation for working with you for the last 4 years. It has been an honor and a privilege. We'll never forget when you came physically to our office to correct a grammatical reference in one of the omnibus bills, which we took as an honor. So good luck to you, sir. We will miss you. Thank you.
Thank you so much, Mr. Grinnell. Without further ado, I'd like to be able to turn it over to Vice Chair Moorlach. Mr. Vice Chair, thank you, and after you're done, we have a parting gift on behalf of the entire committee. Mr. Vice Chair, the floor is yours.
Thank you, Senator McGuire. I don't know how to respond. I'm a little choked up, but it has been an extreme honor to work as your vice chair. You are an incredible senator and a leader, and one of the most impressive presidents when we do floor sessions. You're a star, and I am humbled and honored by your kind remarks. I want to thank Colin Grinnell as well. It's been an honor to work with you and the committee. You've always been accessible, and we've had fun together, so thank you so much. I've been on this committee for 6 years, and it's been one of my favorite, so thank you. Mr. Chair, when I was young and married, before kids, we invested in a new bank. And it was a pretty considerable investment out of the small little portfolio we were building at the time. But it was a fun venture, only to watch after a couple years that, a couple of the loans that they made actually failed, and they were significant enough that the bank had to close. And we had good old FDIC and all kinds of fun stuff way back in that time in history where banks were failing. So when we talk about a public bank, I certainly have personal scars of an investment in such an endeavor, knowing that they are not massive profit-making ventures and could have a lot of downside. As you mentioned, I was the treasurer tax collector for the County of Orange, and one of the first things I did was try to form a bank, because the banks in the area, the large banks, did not want welfare recipients in their lobbies. They just didn't want to cash the checks. They didn't want the dirty diapers and all the things I got to hear about why they should not be doing our check cashing. So when you have 50,000 people show up on a Monday, we had one branch that was in a store, a grocery store, and it blocked customers from going into the store, so they set up a van in the parking lot to cash welfare checks and charged the County of Orange a pretty steep sum for that privilege, even though it was not our fault that the branch was inside a grocery store. So we had fun with the state banking institution, the FDIC. We worked to put together a business plan, worked with our local banks, and we formed we were so close to actually doing something just because we wanted to help those that were dealing with the social services agency. But at the end of the day, Mr. Chair, we were going to save about $1 million a year in fees and costs by converting and setting up our own bank. But we found out that the federal government reimburses 80% of costs for social services, so we were only going to make a profit of $200,000 a year, and that would be after all the audits, all the staffing, all the work. And so it just didn't seem to pencil out satisfactorily. And so I want to keep an open mind on today's discussion, but I have a real concern when the public sector gets into the business that is normally conducted by the private sector, and I get nervous when there's a chance that there could be losses, and therefore the taxpayers would have to subsidize or bail out or whatever could happen. So I'm looking forward to the discussion, but I've sort of had personal experiences,
that have, made an impression on my thinking. But again, I just want to thank everyone. It's been an honor to serve these last 6 years in the State Senate. I want to thank Senator Bradford, who's just been a consummate gentleman as well, and the chairman of the On-Time Caucus. I want to thank you so much. I want to thank everyone that's on Zoom. It's been a great pleasure to become your friends and to work with you, and I'm most grateful for the opportunity. Thank you, Mr. Chair.
Thank you very much, Mr. Vice Chair. Before we come back to you, sir, I'd like to be able to turn it over to Mr. Chair, Senator Bradford.
Thank you, Chairman. I, too, just want to say what a pleasure it's been to work with Senator Moorlach for the last 4 years. You're a gentleman, you're a scholar, you're a decent man that approached this job with integrity, with thoughtfulness, and collaboration. And as we often say, elections have consequences. Unfortunately, this is one that, unfortunate consequence of elections, because your voice is needed here, and it's been appreciated, and it's going to be missed. And I enjoyed, for the last 4 years, sharing the hallway. We're on the second floor, and we're walking into your offices anytime. Always had an open door, and we're in the office late when no one else is there. I had someone to talk to or give a hard time to, and he's always there to give it right back to me as well. And again, one thing I appreciate most is his time value. And he and I are always, we've prided ourselves, always been on time. And it was a friendly competition, but it was just, it evolved that's what we do. So I'm going to miss wondering who's going to beat me to the floor or to committee in the next session. But again, I appreciate the relationship, but more importantly, I appreciate the friendship. And I look forward to bigger and better things in your future. Thank you. Thank you, Senator.
Thank you so much, Mr. Chair. On behalf of the entire Governance and Finance Committee, we'd like to be able to present a very small token of our appreciation of the Vice Chair. First and foremost, Mr. Vice Chair, we got you a great bottle of Sonoma County vino from one of the best, Saini Ranch here, Zinfandel, Old Vine Zinfandel, which we'll provide you afterwards. And a tradition here at Governance and Finance is a lot of candy. So we got Mr. Moorlach his own bag of candy that he is going to be able to chow down on over the coming few days. One of the best memories, we were talking about the Vice Chair, is when Senator Wynn was serving on the committee and the Vice Chair was throwing candy to her children and hit poor Senator Wynn's kid in the head with a piece of chocolate he didn't know was coming in. So that was a lighthearted time, and I just want to say thank you, Mr. Vice Chair. Very grateful. And again, on behalf of the entire committee, some wine and some chocolate, and we are so appreciative of your amazing work, sir. Please, Mr. Vice Chair. We're going to go to the Vice Chair. Did you want to say, please?
Oh, no, I just want to say thank you very much, Senator McGuire. You're first class, 5-star. Top of the cabin, but you're just been great to work with. I will miss you deeply.
We're going to miss you, sir. No, you're not going to go far. So thank you so much, Mr. Vice Chair. Ladies and gentlemen, both committees, we now would like to be able to advance into our first panel. The first panel is titled The Case for Creating a State Public Bank. The first panel will be a total of 25 minutes. We're right now at 9:30. We're first going to hear from Assemblymember Miguel Santiago and Assemblymember David Chiu. They're going to be providing overview and opening remarks on behalf of this panel. We're then going to turn it over to Ameya Pawar. He's with the Open Society Foundation of Public Banking Institute Advisory Board member, and he's a former alderman in the city of Chicago. After that, we're going to then hear from Mark Herbert. Mark Herbert is vice president from the California Small Business Majority. We do have two other individuals who are on the line here today that will be able to provide technical assistance. That's Rachel Torres and Shashil Jacob. Without further ado, ladies and gentlemen, we now would like to be able to recognize Assemblymember Santiago and Assemblymember Chiu. And I just want to say to especially Assemblymember Santiago, thank you for your partnership, sir. You are nothing but wonderful to work with, and we are grateful for your partnership. Assemblymember Santiago, the floor is yours, and this panel has 25 minutes. Thank you so much, Assemblymember. Then we'll go to Assemblymember Chiu.
Thank you, Mr. Chair, for allowing us to present today. I want to emphasize that I'm grateful for the partnership that this committee has provided us, the Senate as a whole, and Mr. Chiu, who really who's really been an incredible to work with. He and I worked on the first public bank bill in the state legislature, and I'm not mistaken, the only successful one across the country to establish local public banks. There's a number of people I do want to thank, besides yourself, who really helped us to make it a solid bill, and eventually got it to the governor's desk and was able to be signed because you understood how valuable it was and how much we needed it at the time, and it's more important today. But Mr. Bradford, too, who through his committee gave us thoughtful input that made it the best possible and strongest bill. I couldn't continue if I didn't thank Mr. Portantino, who really spent a significant amount of time helping us to structure it in a way and bring in stakeholders together. And I'm hoping this next session that we can lean on your expertise again, because I think the valuable meetings that you had with those stakeholders led to a bill that could be signed. And I'm hoping to lean on you one more time, because it would be extremely valuable for us to be able to do that. Mr. Hertzberg, who asked all the $1 million questions and really made us think about this process, because we wouldn't have gotten where we were if we didn't have the tough questions asked from someone who knows the banking and finance system as well as anybody could. And I can go on, but I want to limit to one more thank you, which is Mr. Moorlach. And it's with that same spirit of wanting to help that we introduced the first bill, and we want to continue to introduce the second. And we took your comments very serious when you talked about making sure that it penciled out, making sure that it was responsible, making sure that we limited risk. And we went back to the drawing board and we worked on it. And that's why we got 857 to the governor's desk and was able to get signed. And it's with that same collaborative spirit that we enter continuing a conversation about state public banks and looking at potentially a way to transform the state IBank into California's state public bank. And look, I think it's more needed more now than ever. But I also want to thank a couple of people. Controller Yee, who's going to be participating today, who really gave us thoughtful input, lots to chew on, and we were going to be hoping to work with her and Treasurer Ma to ensure that we do a state public bank that is responsible and does the public benefits and good that we intended to do. But I think today, in today's conversation, and now during this pandemic and economic decline, we see the great pain across our state and across our country. Millions of Americans are out of work. Small businesses are permanently closed. Local governments are facing full-blown financial crises. And we haven't seen big banks step up to do the public good, but they have stepped up to learn to ensure the profit are still being made. And I think there's a problem with that. I think we need to change the way we do the banking system so that we have a state public bank that takes a look at the public good. Will it be profit driven? No. Could it make a profit? Yes. But at the core root of it, it has to be a public interest. And we've seen this. And I don't think we could turn a blind eye on the need to have to reimagine a financial system that puts the public good before profit. And we need real change. And I think we're starting to see that change and the reimagination of what economic system can look like across the country. Is it a big challenge to do this? Yes. Is it worth doing it? Absolutely. 100%. We have to do this. And some might say, well, why should we have a public bank? And I'm going to borrow the words of my colleague, Mr. Chiu, but these were the exact same arguments that were used when industries tried to prevent a public transportation system. And these were the same arguments that were used when we needed to get a public healthcare system. And it's the same arguments that we used when President Obama tried to reform our healthcare structure. And it's the same arguments we're going to be that are being used to suppress conversations about Medicare for all. And so when we take a look at transforming and reimagining the way we do banking, I think it's imperative that we start here in California and show the rest of the nation that banks could do a public good. And we've seen that already with credit unions who have paved the way to improve our communities and sectors, with local community banks that have done great good to improve our communities and put the public interest before the profit. And we look forward to partnering with credit unions and community banks to continue their hard work. And we've seen some of this partnering when you take a look at the Bank of North Dakota and you look at its public good and its partnership with small banks, community banks, and you look at its partnership with credit unions and the public good. There's a way that we can leverage those funds, and I think they're more needed more now than ever because COVID-19 has showed the weaknesses in our financial system. So I would ask us to keep an open mind as we take a look at the way we're reimagined. We've certainly reimagined the way we could do law enforcement. We've reimagined other areas, but we need to reimagine a public banking system that is more equitable and looks to do the public good, particularly today when we've seen communities of color left behind. I represent one with the highest impacted COVID rates, the worst unemployment rates. The rents are continuing to go up. People are lining up for food. Wouldn't it be nice to have a banking system that says, hey, that is incredibly important, and we should invest in those areas and uplift those communities. And I think we've seen even with the public bank in North Dakota that we saw a less of an unemployment rate because it was able to leverage some of the relationships with its local banks to invest in small businesses to keep them afloat. And I think we can do that. And I think when we take a look at affordable housing, you could take a look at student loans. You could take a look at infrastructure development. You could take a look at green space and the way to fight climate change. And I think it has to start when we're thinking about striking a new deal in the way we do economics in California and reimagining what an economic system can look like, where we start to erase systematic racism and the suppression that we've seen in communities of color. And I think it could start with reimagining an economic system, and it starts with reimagining a banking system, and it starts with establishing California's public bank. So thank you very much, Mr. Chair, and I look forward to a robust discussion this next session. And those who I've mentioned, I would expect you to have that conversation over the next couple of years, because we're going to depend on it. And all the stakeholders, we're looking for that conversation. I did not think Mr. Wiener, who was a strong proponent, and Mr. Wessel, who was a strong proponent of the Public Banks Act, the AB 857. I should have done that at the beginning, so I apologize. But we couldn't do it without everybody in this hearing. So thank you very much, Mr. Chair.
Thank you.
And we'll dive right in with Mr. Chiu at your request, Mr. Chair. Mr. Chairs, I apologize. Thank you.
No, thank you so much, Assemblymember Santiago. And again, I just want to reiterate, Assemblymember Santiago and Assemblymember Chiu have been candidly wonderful to work with, to be able to have the robust discussion. They are willing to be able to compromise, and they're committed to this issue. Assemblymember, thank you. Now we'd like to be able to turn the floor over to Assemblymember Chiu. Good morning, Mr. Chiu. The floor is yours. Then we'll go to Mr. Pawar and Mr. Herbert. We, again, will need to be able to adjourn this specific panel at 9:56 due to the tight timeline that we have with Health Committee and the COVID protocols. We'll turn it over to Assemblymember Chiu.
Thank you, Mr. Chair. Good morning, Senators. And let me start for the record, Mr. Santiago and I clearly did not share memos about our common sartorial attire this morning, but we have a strong shared perspective on the future of the state's role when it comes to banking. As Mr. Santiago alluded to, last year, our legislature passed and our governor signed AB 857 to allow local jurisdictions to apply for local public banking charters, which did make California the first state in 100 years to allow the authorization of public banks. It was a monumental first step, and I also, in addition to thanking the amazing advocates and our Public Banking Coalition, as well as senators who are on this call who were early supporters of that measure, I really do want to thank the deep partnership and work that we did with the chairs of the relevant Senate committees, Senator McGuire, Senator Bradford, Senator Portantino, and certainly many others. This last year's conversation was about the possibility of local public banks. Today's conversation is about the importance of the vision of a state public bank. A state public bank that could keep the people's financial power in our state to ensure that we are jumpstarting our state's economic recovery, to catalyze the development of local financial institutions in their communities, providing infrastructure, capital, and support. We all know thus far recovery efforts have been driven by the federal government that chose to use as intermediaries the world's largest commercial banks. These are recovery efforts that have been extremely inadequate. I would suggest that we have an opportunity to establish this year something that builds on the work and the history of our existing IBank. And I would suggest that without a state public bank, our state will continue to be dependent on outside for-profit actors and will be challenged in ensuring a long-term and accountable and sustainable recovery. The vision of state public banking is to provide investment in financial infrastructure to promote the public good. Public goods that involve developing standards to prevent discrimination in our financial services and marketing, ensure that workers and businesses benefit from the value of their work. We also believe that a state public bank would go beyond economic recovery. This is an investment to create a legacy of long-term fiscal sustainability for our state. Creation of a bank would be the first step to create a shared infrastructure, particularly between local jurisdictions and our state. As Mr. Santiago alluded to, the Bank of North Dakota has been a clear example in this area. Their bank has consistently delivered double-digit returns in equity to their state, even during the 2008 financial crisis. This year, the Bank of North Dakota facilitated North Dakota having the largest PPP loan funding per workforce in the country, helping to get those loans to the businesses that need them the most through community lenders. We also know that state public banks would bring revenues and profits to rural and urban communities alike that represent viable banking markets that are often ignored by Wall Street. Now, I know we didn't have enough time this past year to get the details right, and that I would suggest is the most important thing that we could be engaged in right now. I really appreciate the fact that I think there's a lot of shared vision on how we do this, but as we know, the devil's in the detail, and that's the engagement that we're hoping to have today. Chairman McGuire talked about the challenge of doing this during this pandemic and recession, which I greatly appreciate. What I suggest, though, is that we also focus on the challenges of not moving on this during this time, as we are hoping and praying for a speedy and fair recovery. I think it's fair to say that our communities have been crying out for help from the largest banks in America, and unfortunately, that help has not yet come. One final observation, I know Vice Chair Moorlach, appreciate your participation in this hearing, and I know we've always had healthy debates on these issues, and you've always helped to ensure that whatever we do, we are moving forward the best policies, and you referred to a private bank that had failed. I would note that the bill that we moved last year put in so many requirements for local public banking, from upfront analyses, public scrutiny. The approval requires for any private sector financial institutions, including FDIC deposit insurance, collateral requirements, et cetera, that it's possible that it will be very difficult for local jurisdictions to meet these requirements. And I do appreciate the perspective that there are plenty of things that the private sector can do better than the public sector. But in this field of banking that is supposed to be serving the public, you look at the mortgage foreclosure crisis, the student lending crisis, the predatory consumer loan crisis, the failure of banking services for millions of small businesses during this recession, the lack of investment in infrastructure, and the fact that we have the largest banks in the world in our country serving California allegedly that have been making up fake bank accounts, that have been investing in the gun industry, the fossil fuel industry, bad labor practices, that are denying our constituents at this moment unemployment benefits from EDD. We need to look at real alternatives. So with that, again, I want to thank everyone for the engagement in this conversation. Now more than ever is the time to have this discussion on how we build a truly equitable economy. Thank you, Mr. Chair.
Assemblymember, thank you so much. And again, we are so appreciative of your partnership, sir. Thank you today and ongoing. You have been wonderful to work with, and it's good to see you, sir. Thank you so much for participating. Ladies and gentlemen of committees, we now would like to be able to move on to hear from Mr. Pawar. He's from the Open Society Foundations. He's a Public Banking Institute Advisory Board member, and of course, a former alderman in Chicago. Then we're going to turn it over to Mr. Herbert, Vice President of the California Small Business Majority. We have approximately 10, 12 minutes left in this panel. Let's turn it over to Mr. Pawar, and we want to say thank you, sir, for participating. The floor is yours, and good morning.
Thank you, chairs. Thank you to everyone present here today, including the senators and the assembly members. On background, I am a leadership and government fellow with the Open Society Foundations, and I'm working on scaling local and state public banking efforts. I also served 2 terms on the city council in the city of Chicago, and I've run statewide before. And I really commend all of you for having the conversation about truly building the financial infrastructure in the state of California to advance the public good and to fill in the gaps that are really created by banks, because truly that's what this proposal really does. When I served on the city council, I saw the limits of legislation and the limits of market-based tools to solve problems. I got a chance to lead efforts to raise the minimum wage and guarantee paid sick leave, work with tools such as low-income housing tax credits and enterprise zones and tax increment financing. These tools that were created to really respond to the impacts and the externalities created by private banks. And what I found is neither of these tools necessarily, both legislation and the market-based tools, necessarily help all of you meet the moment in that way, sort of address the problems at the scale of the issues. And truly, what banks really have the power to do is they create money. 97% of all the money that gets created in the US economy is created by banks. And that is a license that is provided by the state. And normally we would ask something in exchange for that license, some public good. And, there are Reinvestment Act and other market-based tools. But again, to give you perspective, low-income housing tax credits are one form of to build affordable housing. They create about 100,000 units of housing nationally every year. And there's a national shortage of 7 million units, right? So it would take 70 years to use this tool to build the we need today. So what public banks really do, and what this proposal that is put forward by the sponsors is a middle ground. It's in between unfettered markets, and it's in between state control. It allows the state of California to build a financial infrastructure, fill up existing capacity, to lend to local governments so that they don't have to access the municipal liquidity facility, which charges penalty rates, to provide deposits to CDFIs and community banks so that they can lend to small businesses. And it also flips the narrative and the conversation around who actually makes money from lending to government and from lending to small businesses. We can't go back to the pre-COVID economy. That economy wasn't working for working people. But in order for us to finance the type of infrastructure, the kind of housing, the kind of things that we see to really transform our communities, we really need a financing partner that aligns with the economic development agenda that is set forth by the state. And so things that I think we should be all thinking about is you have a bank, an infrastructure bank that has been in existence for 25 years. What you're able to do here is expand its capacity and expand its role and expand its mandate so that state and local governments who are pressed for, in terms of dealing with a structural deficit and deficits connected to diminishing revenues, they have the ability to access state dollars at a lower rate from an infrastructure bank going to the markets and paying a higher interest rate. So the question we have to answer is, does it make sense to pay a higher interest rate county and state level, or should the state provide those dollars at a lower rate, still make a return, still have the full faith and credit backing for those loans, and make sure that our local governments don't have to cut services or cut staff? Can we lend to CDFIs and community banks to lend in communities that have been disproportionately impacted by institutional racism, by disinvestment, by other issues that we've seen that are historical in nature? And then also, does this state bank also create the capacity to drive transformation in the long term? This is a really fantastic proposal. And I just want to end and close by saying the license to create money, that is what the public provides private sector banks. There is no reason why the public sector couldn't also obtain a license to create money to fill in the gaps that are created by private sector banks. Thank you.
Thank you so much for your comments and for your testimony today. We're honored that you're with us. Thank you. Very, very grateful. Ladies and gentlemen, we now would like to be able to round out our final speaker in our first panel. That's Mark Herbert, Vice President, California Small Business Majority. Mr. Herbert, we're going to provide 5 minutes. We'll go a little over our time, but 5 minutes, sir. The floor is yours, and I'll give you a 1-minute prompt when we get close to that 5-minute mark. Mr. Herbert, good morning.
Thank you, Mr. Chairman. Thank you, members of this special committee. I appreciate the joint hearing. I appreciate the opportunity to join you. I will try to be brief because I imagine there are questions, as well as want to make sure that we respect everyone's time. My name is Mark Herbert. I am Vice President, California for Small Business Majority. We are a national small business education and advocacy organization. And we just fundamentally believe that entrepreneurs and small business owners are essential building blocks to a healthy, sustainable community and economy. As we all know here, COVID has been absolutely devastating for California small businesses. We have seen closure rates, especially in communities of colors, upwards of 30 to 40%. And we know that that's simply not sustainable. And if we're looking to actually recover and build an inclusive economy coming out of this pandemic, we need to make sure that the capital needs of those small businesses are addressed. As we know, the Fed stepped in to pump billions of dollars into the small business community, but as Assemblymember Chiu referenced, it was vastly uneven. Mostly it was medium to larger businesses that got the majority of those because it was built on top of the existing structure of how small businesses access this capital. And it's primarily through banking relationships with many of the very small businesses simply didn't have. And we know from some of our surveys that even now, as we look forward into the coming months, roughly 40% of entrepreneurs of color aren't quite sure they're going to make it into 2021 and beyond. And the key piece here is that fundamentally how our capital markets are built for the very small businesses, it doesn't work. It's not built for them. And so we need to think about how do we build better marketplace that actually meets the needs of the various small businesses that we seek to serve that are critical to the livelihood and critical to the vitality of our neighborhoods. And fundamentally, we need to make sure that we are de-risking capital. It can be expensive to make loans to really small businesses, and it can be risky. And we need to de-risk it and make sure that there are some sort of backstops and some sort of subsidy available for those very small businesses. We already know that community lenders do this day in and day out. Oftentimes, nonprofit lenders like CDFIs are raising money to make sure that that capital is getting to those very small businesses. So we need to make sure that we're giving the tools to our CDFI and community bank friends so that they can make these loans to the various small businesses in our community. I'm thrilled to see that some of our good friends from the CDFI community will be speaking a little later today. I think their role in making sure that the very small businesses here in California have access to the capital that they need to survive is going to be essential. We're pleased to see that the state already stepped up to provide a number of financial investments through the IBank. We appreciate Mr. Wu and his team and all the work that they have done to address the challenge that small business owners are facing. But some estimates put the small business capital need in the tens of billions of dollars. And while we have seen tens of millions invested, and we hope to leverage that to hundreds of millions in small business lending capital, the scale and the need of the problem is significant. And so we need to make sure that we are thinking about scalable solutions. We appreciate the creativity that the California Rebuilding Fund has created in partnership with IBank and philanthropy and private investors. A new program just came online on Friday that will get additional dollars to CDFIs, to these community lenders to get small dollar loans to the business owners on the front lines of this pandemic. And so we appreciate that creativity. We want to think about ways that could be scaled. We think that the promise of a public bank has the opportunity to think about how do we get more tools and more resources and more capital to the smallest businesses. But fundamentally, we need to think about not just this moment and meeting the significant need that small business owners in our state face, but how do we build a more equitable economy in the future?
1 minute.
Even before COVID, the challenges that small business owners face were significant, and COVID simply exacerbated that. We need to make sure that we have more tools, better infrastructure to really meet the needs of the smallest businesses here in the state. So we're excited about the opportunities that have been created and the pilots that have been created. We're excited about this conversation and what it means for California small businesses, and we look forward to this continued discussion moving forward. So with that, I will turn it back to the chair.
Mr. Herbert, thank you so much. We're grateful that you're with us today. Thank you for your testimony. Ladies and gentlemen, we're now going to be going to the senators for questions or comments. I want to remind folks that we will be taking public comment at the end of today's agenda. That call-in number, if you want to provide public comment, is 844-291-6364 with the code 605-7653. Ladies and gentlemen, let's turn to our senators from both committees to see if we have any questions or comments. Questions or comments now from the members of both committees. I currently don't see any hands up. We're going to do a final call for questions or comments. Questions or comments, final call for panel number 1 from senators on this committee. Let's go to the Vice Chair. Vice Chair Moorlach, good morning.
Thank you, Mr. Chair. I don't want to make a big deal out of the bank in North Dakota. I just want to point out that the population of North Dakota is 756,927, which is about 1/50th or about 152 the size of California. We have 4 cities with greater populations, and we have 15 counties with greater populations. So I'm get a little nervous about using Bank of North Dakota, which is probably about the only state that's done something like this, as an example, but I don't want to get into the debate of it. I just want to point it out for perspective. Thank you.
Thank you so much, Mr. Vice Chair. Appreciate that. Ladies and gentlemen, I'm looking at our screen. We're going to do a final call for any individual. We're going to go to Senator Durazo. Good morning, Senator. The floor is yours.
Thank you. Thank you, Mr. Chair, and all my colleagues. A question is, what is it about a public bank? How will the state ensure that poor communities and local governments will have access to these same financing opportunities as wealthier ones? How is it that we make sure that the benefits of this new system are actually shared equitably?
Thank you, Senator. We're going to first turn it over to Assemblymember Santiago, then we'll go to our 2 public banking experts there, Mr. Pawar and Mr. Herbert. Assemblymember Santiago, and I do want to let folks know that Assemblymember Chiu has a meeting at 10. Very grateful, Assemblymember. Thank you for participating, but I just want to give folks a heads up on that. Assemblymember Santiago, the floor is yours on Senator Durazo's question.
And thank you for handing it off this way, since doing this virtually is new to me, so I appreciate you doing it that way. Senator Durazo, when we did the first act of public banks, AB 857, we included in their language that you had to state your public purpose to the existing bank if a local municipality were to do one. And when we're taking a look at a state public bank, we have the same opportunity to create within its charter a public goal, be it small businesses, be it affordable housing, but also in its governance structure could be embedded an aim at the public good and held accountable to that public good. So I hope that answers your question. But there certainly is the opportunity to include language in there to take for specific purposes, and that's the debate that we hope that we will have. And when you take a look at the three cities or areas that are looking at public banks, and they're developing the process currently as to what public good they'll undertake. And I'll reference the Bay Area, San Francisco, and also the LA LA City area. And I think there'll be more in the next couple of years. You have the ability to identify what that public purpose could be, and we'll have that opportunity. Thank you.
Thank you, Senator Durazo. Any comment back? And if it's all right, Senator Durazo will then go to two others. Mr. Pawar, any comment on Senator Durazo's question?
Yes, thank you. I think, this is a matter of how you scope it. You could scope the activities, expand the role of the IBank to include affordable housing or direct deposits to CDFIs that do lending to X, Y, and Z businesses. A lot of this can be scoped on the front end. And certainly, I think, given sort of the equity focus that I hear from the sponsors, I think that is key in sort of making sure that that sort of language gets codified both in the legislation, but also in the mandate of the IBank, and then as there is oversight from the legislature over the IBank, and to continue that you're meeting those markers.
Thank you so much. Why don't we go to Mr. Herbert, then we'll see if Senator Durazo has any closing comments, then we'll see if there are any other senators who would like to be able to make a comment or ask a question. Mr. Herbert, please, floor is yours.
Thank you for that question, Senator. Incredibly important to think about how do we make sure that the organizations already doing so from a small business perspective. We have amazing entities and organizations doing this small business, small dollar lending already in communities. I mentioned CDFIs, they're a critical component. The more that those CDFIs can be given the liquidity that they need and the capacity that they need, because they are already targeting the market that we need to see receive these dollars. As I mentioned before, the existing small business lending marketplace isn't really functioning well for the smallest businesses that we care about. And so the more that we can scale the infrastructure necessary for CDFIs to make those loans, to work with the lenders who are already doing that work, the more that we can ensure that these dollars get to the communities that can benefit the most.
Thank you, Mr. Herbert. I'd like to be able to see Senator Durazo. Do you have any closing comments before we move on, Senator Durazo?
No, thank you very much. I could listen to the following panelists, but I guess I'm looking for in the future presentations is what gives teeth to what we want to get out of a public bank. So we'll leave that for the following panelists. Thank you. Thank you all.
Thank you so much, Senator Durazo. We're going to do a final call for any questions, comments from senators from either committee. Would like to be able to see hands up if there are any final call for questions, comments from senators. All right. Hearing, seeing none, ladies and gentlemen, we want to say thank you to our first panel. If you can give us 1 minute and appreciate the patience of all who are participating remotely, we're going to turn the dais over to Senator Bradford, the chair of Banking and Financial Institutions. I'm going to turn this over to him. We're going to do a quick disinfecting, and then we'll run panel number 3, which is going to be with our constitutional officers and then hearing from state agencies. Give us 60 seconds. We'll be right back with you as we disinfect.
Thank you, Chair McGuire, and our panelists who participated in the first panel. Now we're going to move over to our 2 constitutional officers. We have 2 amazing women who have served the state of California in a variety of capacities on the State Board of Equalization, as members of the California legislature as well. And I'm honored to call them both friends. First, we're going to hear from our state controller, Betty Yee, who's the chief fiscal officer here in the state of California. She makes sure all bills are paid. Most importantly, if you're a state employee, she makes sure you're paid on time, and that's her signature that's affixed to every paycheck, and we're going to give Ms. Yee 10 to 15 minutes to give her perspective on public banking, and then we'll move to our treasurer, Fiona Ma. So, Controller Yee, if you're ready, the floor is yours.
Thank you very much, Chairman Bradford, McGuire, and members. Good morning, and thank you for the invitation to testify before you and provide my perspective as California's controller relating to the subject of a state public bank. First, I'd like to start out by just acknowledging the members of the first panel and to just say that I share very much the concerns that we need to build a more just and equitable economy. And this is one where underserved communities, particularly our low-income Black and Latino communities, have access to capital and are better supported during and after, certainly, events like this pandemic. You know, I'm fully aware as your chief fiscal officer that our economy is not working for everyone, specifically for people of color and low-wage workers. We certainly must do more to remove the current barriers that our Black and brown communities and businesses face in accessing much-needed capital and financial support. However, a state bank is simply not the smartest, most direct way to serve people who need immediate support. It's a complex endeavor, and I am going to go into some technical details in a moment, but bottom line, it's fraught with risks to the state of California's ability to meet our existing and future financial obligations. And as I will elaborate shortly, we don't need to reinvent the wheel, given that there's already an existing network of financial institutions with the infrastructure in place to accomplish these goals. And I'm very happy to see that the agenda today is comprehensive. I am delighted that we are mentioning CDFIs and also have the ability to hear from Mr. Wu from the IBank later on today. You know, my primary responsibility as the chief fiscal officer is to protect the state's fiscal health. And my office analyzes the state's cash flow needs on a daily basis, and we work with the Treasurer's Office to ensure that there are sufficient funds available to make payments as they are due pursuant to the Annual Budget Act. Because the pandemic has devastated so many of our economic sectors and businesses in our state, causing soaring unemployment, volatile financial markets, and uncertain tax revenue, I and my team are more committed than ever to monitoring the situation and to prudently manage our financial position over particularly the next 2 to 3 years in order to ensure we can pay the state's bills. To establish, capitalize, and maintain a state bank by forcing deposits of the state's pooled money investment account, the PMIA, remains a dangerous scheme and puts California taxpayers at enormous risk. The PMIA should remain invested in secure collateral, such as U.S. Treasury, debt, and safe instruments with sufficient liquidity and yield to provide the state and the thousands of local governments invested in the PMIA the maximum flexibility to withdraw funds as needed. Requiring the Treasurer to invest PMIA funds in short-term debt issued by the California Infrastructure and Economic Development Bank, the IBank, which would serve as collateral and would be backed by the state, is actually a very circular proposition, as it means we would be replacing secure collateral, such as U.S. Treasury debt, in which the PMIA currently invests, with a new untested debt instrument for which there's no current market and no way to ensure timely liquidity, meaning that if we needed this money, we couldn't get it in time. Moreover, the state and California taxpayers would be at risk for these new untested investments. In fact, in response to question 3 from the committee's background brief, public bank advocates state that if the bank receives a federal guarantee for its assets, it may be able to attract an investment from the Surplus Money Investment Fund or the PMIA. This is a much more prudent course of action than establishing a new bank based on the premise that the state will invest its funds in an untested financial guarantee, and then let the IBank demonstrate that it offers competitive rates and comparable security before depositing state and local government funds. My office and I have been able to manage the state's cash flow for the last 6 years without external borrowing, and we are now closely monitoring the economic downturn. Although the legislative analysts recently reported state revenues are $26 billion higher than originally forecast for the 2021-22 fiscal year, we cannot lose sight of the significant financial challenges ahead for the state. This is a one-time surplus, and we expect multi-billion-dollar budget shortfalls through fiscal year 2024-25. that would likely require the state to sell revenue anticipation notes to pay the state's bills. And I would just caution you, for those of you who were following at the time, the lessons learned from the 2008 recession, which put the state in a precarious financial position, resulting in the issuances of several revenue anticipation notes, revenue anticipation warrants, IOUs, and a credit rating downgrade to BBB. During that period, the Comptroller's Office counted every penny on a daily basis in order to pay our bills. Using the PMIA funds, otherwise intended to be invested in short-term liquid instruments in order to make longer-term loans, is a misalignment of purposes and could lead to even higher borrowing costs for the state of California if the size of the revenue anticipation note had to be increased due to illiquid investments. And I just wanted to clarify something, because I know we've been talking a lot about the Bank of North Dakota. And to Mr. Moorlach's point, aside from scale, or adding to his point, I think we need to revisit the founding principles upon which the Bank of North Dakota was established, and which stipulated that the Bank of North Dakota assist in the development of local banks, not offer a competitive alternative. And so unlike what's being proposed in the legislation before us, the Bank of North Dakota does not provide banking services to individuals or businesses. Instead, a local bank must apply to access one of their lending programs on behalf of the customer, because it recognizes local banks understand the communities they serve better than a state entity could. And beyond the enormous risk of diverting from the PMIA, a state bank could be subject to challenge for violating various provisions of the state constitution. Any proposal that provides the pledge of California's full faith and credit to depositors in a state bank arguably violates provisions of Article 16 related to public finance restrictions. Now, I do want to say, and to both Mr. Chiu and who authored the successful AB 857, and we are really anxious to see how local governments will be pursuing its own public bank, and also to Mr. Santiago. I think all of the discussions that have ensued since certainly AB 310 has been introduced and deliberated upon have really focused on just how to keep the state out of risk. Certainly that's been, kind of my focus, but there is a better alternative here. And the banking system that's being proposed in this bill, I would argue, already exists. Rather than start a new costly high-risk state entity, I propose that California instead join the growing national public and private financial commitment, support, and attention directed at the existing network of community development, financial, and minority depository institutions, to which I will collectively refer to as CDFIs for the purposes of this hearing. And these are institutions that already exist throughout the communities that we are aiming to serve. CDFIs are private sector organizations that attract capital from private and public sources. We have over 81 CDFIs in California, each with deep reach into underserved minority communities, helping to develop their neighborhoods, support their businesses, and drive economic growth and community development. These locally based organizations are well suited to make the best decisions about how to meet the needs of the communities they serve, offering multiple other public positive benefits to these communities that reach far beyond the financial bottom line. CDFIs were originally established to specifically provide financial services to underserved communities that state and federal banks were not assisting in any substantial way. The Federal Community Development, Banking, and Financial Institutions Act of 1994 created a CDFI fund administered by the Department of the Treasury. And the purpose of this was to promote economic revitalization and community development by investing in and assisting CDFIs through equity investments, capital grants, loans, and technical assistance support for organizational capacity building. CDFIs apply for limited funds through a competitive process that requires the CDFI in most cases to provide at least a one-to-one match of non-federal funds to receive financial assistance. The fund also rewards banks and thrifts for making investments in CDFIs and distressed communities through its Bank Enterprise Award Program. And the New Markets Tax Credits Program, initiated in 2002, encourages private sector investment by offering tax credits for qualified community development investments. CDFIs use the money awarded through the CDFI fund programs to leverage private sector resources into distressed communities and to support an array of community development activities, including housing for low-income people, businesses owned by low-income people, basic financial services, commercial facilities that promote job creation or retention, and technical assistance. And CDFIs supply the tools, including providing financial services, loans, and investments, offering training and technical assistance services to enable economically disadvantaged individuals to become self-sufficient stakeholders in their future. And I want to just address in part Senator Durazo's question, which I think was exactly the question on point, and that is how do we ensure that what we are endeavoring to undertake really reaches and has the impact intended for the communities that we are targeting here. And what I will say is that CDFIs cultivate specialized knowledge about the communities in which they do business. They forge deep relationships with their customers and community leaders. This translates into a willingness and commitment to spending time on individualized service and specialized programs that often are too time-consuming or costly for mainstream financial institutions to implement. Rebuilding disinvested communities and making loans to people with limited or poor credit histories requires more than simply providing access to conventional loans. It requires flexibility to adapt lending guidelines to the needs of borrowers, to accept unconventional collateral for loans, and to provide education, training, and assistance to potential borrowers. Mainstream financial institutions invest their own capital directly into CDFIs, receiving Community Reinvestment Act credit and potential cash awards under the CDFI Fund's Bank Enterprise Award Program. CDFIs create a future market for mainstream financial institution products and services. They incubate businesses and people, helping them to grow and prosper. Once their customers have achieved some success, established a good credit history, and reached a substantial size, they can then proceed to accessing capital and larger amounts of capital available from more mainstream lending institutions. CDFIs are trailblazers in their neighborhoods and bring people into the economic mainstream as contributors to the economy. Now, the number of CDFIs continues to increase. Nationwide, there are now over 950 CDFIs certified by the CDFI Fund. They operate in every state and the District of Columbia, serving both rural and urban communities. And community development loan funds lend to build businesses, affordable housing, and community facilities. Now, I know some of the proponents of public banking argue that, among other things, a public bank could support CDFIs with funding from the pooled money investment account and the IBank. And what I would say to that is we don't need to establish a state bank to meet these stated goals. The legislature could simply increase funding for these programs directly through a one-time deposit from this year's increased revenues identified by the LAO, or use bond proceeds to generate additional working capital. In fact, the IBank has already initiated a new public-private effort to support CDFIs in making more loans to small businesses, and I know Mr. Wu will be covering that in a moment. And should this program prove successful in meeting its goals, then the legislature has the option of increasing funding for that program. And we should also call on our state and national banks to increase and expand their financial support for CDFIs that already exist here in California. And are here to serve our underserved communities and provide specialized financial services to individuals and businesses that have lacked traditional access to credit and capital. There is a national effort underway due to pledges by the nation's top banks, committing a percentage of their profits to CDFIs, as well as technological and mentoring support. And I would urge my colleagues on this committee to focus on and get familiar with this effort and engage with it. Really have California step in to this. California has not traditionally been a big player with respect to national efforts like this relating to CDFIs, and I think this is an effort that is well worth engaging ourselves. And this will get the most robust, sustainable, targeted economic development support to those communities in the safest, most prudent, and impactful manner. And for more information on this, I'm happy to provide the link to the committee. But there is a new FDIC report called Investing in the Future of Mission-Driven Banks. And there is abundant information in there about that. So let me just conclude by just talking about what California can do to grow CDFIs and their capacity. And I think there are many challenges, certainly with CDFIs in California, because frankly, they've been neglected in terms of how we lift them up to do the work that they have been charged to do in providing broad reach into the underserved communities. First, access the capacity of California-based CDFIs to manage capital, meet operational benchmarks, and then use these metrics to identify sufficient capital amounts needed to scale up new lending. Secondly, we can call upon the large banks to deploy more capital and commit on the order of 2% of profits over the next 10 years to invest in CDFIs and address equity issues. Large banks can also provide financial support through asset management funds, another way to support capital investment in CDFIs. Third, we want to resolve the technological and modernization challenges of CDFIs and their over-reliance on paper processing, which obviously impedes the ability of those institutions to quickly process transactions. Fourth, we're here in California, the tech capital of the world. I would ask that we call upon California's tech companies to collaborate with CDFIs to determine their software technology upgrade needs and call upon large banks to help fund these upgrades and requisite staff training. Fifth, we can support CDFIs to expand their staff's capacity and talent by calling upon leading financial institutions to donate and support internship and fellowship services that support rising stars and create systems to succeed long-term. And then lastly, we want to be sure that we evaluate how well the state's financial giants are fulfilling their obligations under the Federal Community Reinvestment Act. And so in conclusion, Chairman Bradford, McGuire, and members, again, thank you for the opportunity to testify before you today. I want to applaud the vision and certainly the goals that both Mr. Santiago, Mr. Chiu, and the public banking community are trying to achieve. I would just leave you with this, and that is, any solutions to create economic equity for disproportionately affected communities must be intentional and urgent about delivering results. And they must involve the communities in the development of these solutions and build lasting resilience in these communities after all is said and done. And I believe strengthening CDFIs is an essential way to lifting up our low-income communities of color and promises to deliver results more quickly than a lengthy, costly, and risky process of establishing a state bank. These communities have waited long enough, and I'd be happy to answer any questions and certainly pledge my support to continue to work on this issue. And also wanted to note that I have on hand Lynn Paquin and Indira McDonald, my Deputy Controllers for Investments and Legislation, respectively, for questions from the committee as well. Thank you very much.
Thank you, Controller Yee, for that thorough presentation. Next up is our State Treasurer, an individual who served in the California Legislature and also a former member of the State Board of Equalization. Serves now as our chief banker, our asset manager, controls all investments for the state of California, that in the person of Treasurer Fiona Ma. Ms. Ma.
Thank you, Senator Bradford, and thank you, Senator McGuire, for having this hearing today. I would also like to thank Senator Moorlach for his longtime service. We have worked together hand in glove for many, many years, and as a CPA, he understands a lot of the issues that we have brought forward. So thank you, Senator Moorlach. I'd also like to thank Assemblymember Santiago and Assemblymember Chiu for bringing up this issue and working on the number of bills that they have worked on. I know Scott Wu, Executive Director of the IBank, is going to be speaking next, as well as Manuel Alvarez, Commissioner of the Financial Protection and Innovation, two partners that we work with very closely. We all sit on similar boards, being on the finance team, as well as with Controller Yee and the Governor's Office of Finance. And so it's great. I look forward to hearing their comments after. I also want to give a shout out to Mark Herbert of the Small Business Majority. Since this pandemic started on April 16th, we have done over 100 different Zoom webinars, mostly focused on small business, with speakers from the Small Business Majority, and they are very, very well versed on what is out there, what's happening on the ground, what's available for small businesses. So thank you to the Small Business Majority, and thank you to Controller Betty Yee. We work hand in hand to make sure that me as the banker, I'm collecting all the money and that the controller is making sure that we could pay all of our bills. I know she talked extensively about the PMIA account and the Bank of North Dakota, so I won't cover that. But we also, she talked about expanding the role of the CDFIs, which we are very, very supportive of here in the Treasurer's Office. Just a little bit about me and my background. I'm the oldest child of immigrant parents. I am a CPA, a tax accountant trained, started my professional career with one of the big 8 accounting firms, left and started my own practice at the age of 28 and became president of the Asian Business Association. And that was the first time I ever got involved in politics and started to realize that although small businesses are the backbone of the economy and many of our relatives and forefathers and mothers came to this country starting a small business because they didn't have necessarily the education or the skills for different type of jobs, that small businesses are the backbone of the economy, but it's so hard to run and operate and be successful as a small business owner. And so that's where my passion for public service started, really making sure that I am a voice for small business and trying to do as much outreach and awareness and education to help small businesses, but also to help keep them out of trouble. Now, as your state treasurer, I oversee 3 main divisions. The first is our cash management. So all of the revenues, tax, fee, fine, penalty, interest comes into our bank, totaling about $2.6 trillion a year. I send whatever the controller needs to pay our bills, and then the rest I invest through our investments division. So we have about $100 billion in short-term portfolio. 70% of that is the state's idle funds, and only 30% really, is it 30? 18%. 18% of that 70% is the general fund amount, and the controller talked about how we need that money for the rainy day or emergencies. 30% of the portfolio is for local governments. We manage the idle cash for about 22 local government entities, and so they entrust their money with us through the local area investment fund, and we cannot touch that money. That is not something that we can appropriate through the state of California. I also chair the public finance division, which issues all of the state bonds, the general obligation bonds, the revenue bonds, as well as the agent of sale for the UCs and the CSUs, amongst others. And our bond portfolio is about $90 billion right now. And the good news, even during the pandemic, in April, we were the first state to go back into the market to sell our bonds. We were a little bit nervous, but the market was strong and investors have a lot of confidence in the state of California. And since then, we've issued about 10 different bonds that have been highly sought out by investors. So that's a good news for the state of California. I also chair 15 different boards, authorities, and commissions. And many of them are funding and financing hospitals, schools, public transportation, affordable housing, green energy, advanced manufacturing, and the like. And I just want to talk a little bit about some of the programs that we have here in the state of California for the members that are listening on this call in terms of trying to meet the needs of our underserved communities. First, under my jurisdiction is our CalCap for small business. We provide a loan loss guarantee to certain financial institutions so that they will be encouraged to loan to those people who have maybe, their credit isn't that good or they're having problems accessing the market. So think of the CalCap for small business as the lender of last resort. Then I also sit on the IBank, and I think Scott Wu may talk about this, but the governor earlier, April 2020, put $50 million into the IBank for small business program, which is a loan guarantee program. And that program is also very popular and oversubscribed, and again, helps those underserved communities, hard to access folks who are just having a difficult time accessing the PPP or even the EIDL loan. So those two programs are available for small business owners. Then someone did mention last Friday, the governor opened up a new program, the California Rebuilding Fund. And this is also to help small businesses who employ less than 50 employees with revenues of less than 2.5 million. The loan repayment time is 3 to 5 years with a 4.25% fixed rate of interest. And if an applicant does qualify, they will be matched up with a CDFI to help them through the process, the loan process, as well as managing them through the payment loan term. So that is a new program. We thank the governor for putting more money into that. And we also understand that the California currently lacks any state supported program to incentivize banks and credit unions to open up banks in underserved communities. However, my investments division has a time deposit program where we put money into local headquartered California banks. We put anywhere from $25 million to $250 million with the bank so that they can loan it out to their local communities. We expanded the pool to include more banks in the Central Valley, the Central Coast, the North State, as well as the Southern states. And especially when there is a disaster event like a fire, my folks are calling to make sure that the banks, the local banks, whether they need a little bit of assistance, where we can infuse money and they can loan it out to get the community back on track. Currently, the amount that is deposited into local headquartered community banks is about $4.6 billion. And one of the bills that we strongly supported was Senator Bradford's bill in 2019, SB 747. This would have created banking development districts supervised by the DBO or the new DFPI, similar to what New York has since 1997. And it would encourage the establishment of bank branches that would serve demonstrated needs. $10 million would go to each of these branch banks that opens. And we think that that is a good idea and a good bill since local governments understand the needs of their communities the best. And so I just want to, conclude by saying that with AB 310, in that letter I submitted to the committee, I am not against exploring the viability of state banks, but want a thorough, appropriate study on how we can do this without putting California's budget and credit rating at risk. We were neutral on AB 857, but we thought that that was a good idea because it did not require independent funding sources, and it was going to be self-funding. And we were really and are still looking forward to what LA, San Francisco, as well as the East Bay cities that are going to take the lead in creating these municipal banks. So I am available and open for questions, and I also have experts on the line who can answer any other technical questions you may have.
Thank you, Treasurer Ma. Before we move to the next panel, I'm going to open it up for questions from any of my colleagues here in the chamber or remotely. Does anyone have questions for either our controller or our treasurer?
Mr. Chairman, Jim Neilsen, if I may pipe in here for a comment.
Go right ahead, Senator.
Mr. Chairman, I certainly appreciate this most recent testimony from our state elected officials and responsible of this area. Generally, I will note that this has a long history. The last time that this gained some traction in California was the late 70s, a state bank. It was looked at the time as a curiosity, but then not as a good idea, and it did not advance. I am reminded that we are trying here to reinvent the wheel. And is that necessary? I think not. EDD was mentioned earlier in this testimony today. If there's any agency of government that does not work, it's EDD. Now, there are many who do not work. To those who put their confidence in all of the answers being a state entity, in this particular case, a state bank, that is fraught with great danger. And it subjects the administrative branch of government, the executive branch, if you will, to a role of legislation. Now, what do I mean by that? A big part of this earlier effort in the state bank was touting socially conscious investing. That is risky business, to say the least. Anyone will attest to that. If we're going to do policy, then let's do it through the legislative process, which is a much more deliberative process than setting up an agency of government who is guided administratively merely by the administrative regulations or the subject to the Administrative Procedures Act. But that subjects the citizens to great policy and economic risk. California is in no good position to be proud of many things. We are touted to be, for example, the high-tech capital of the world. And almost none of these multi-billion-dollar high-tech projects embraced by the state of California have come in on time nor on budget. It's been a huge embarrassment. And all the state has done is create an agency supposedly to straighten the mess out. That's been around, I think, 6 or 7, maybe even 8 years. And all it's mostly accomplished is to change its name 2 or 3 times. If California cannot get tech right, that's a pretty sad statement.
Thank you.
My point is, it'd be wary to put a lot of trust in our future in banking in a, quote, state bank. And to even mention North Dakota as relative to an argument for something like this in California is ludicrous. There is no comparison. And I would argue that North Dakota is a deficient system in itself, but that said, it is minuscule compared to the complexities and the magnitude of what we're dealing here in California. So when we get excited about them,
Senator, we're going to ask you to direct the question so we can stay on time.
Pardon?
We're just going to ask you, did you have a question so we can stay on time? We're just trying to stay on.
No, I'm sorry, Mr. Chairman. No, I do not. I was making an observation, but I thought this would be an appropriate time for that observation. Thank you for your indulgence. I may have some comments.
We will come back to you for sure. I see I have Senator Caballero with a question, and then we'll go to Senator Durazo. Senator Caballero.
Thank you very much, Mr. Chair. I don't have a question. I just want to say that this has really been a great hearing, and having such talent and expertise in all of the witnesses is really incredible. And I say that because I think there are really good altruistic reasons for having a state bank. But I also feel just as strongly that it's always fraught with danger when the state or government walks into the private sector arena and says, we think we can do a better job of it than you. Or we have a different goal in mind by doing it our way. And I was involved in the beginning of a bank, and I've seen the struggles in making decisions and choices. Thankfully, the bank still exists, but we set it up to be an altruistic bank. And in the end, I think it was very difficult to get there for some real practical financial reasons. And so if a private industry bank has a hard time of it, then we've got to figure out what the solution is. So I just want to say thank you, really. incredibly important information, and this is not going to go away. I think there'll continue to be a discussion, but there's some lessons learned, I think, that that we'll see in the municipal banking arena. So thank you, Mr. Chair. That's all I have.
Thank you, Senator. Next up, Senator Durazo.
Thank you, Mr. Chair. Not a question, but just maybe in some other way we could address this. I understand that the current legislative version does not include PMIA funds. So at some point we should clarify that. But both our esteemed, and I adore our controller and our treasurer, your history speaks for itself, period. You stand for our community. I guess my basic question is, if the state bank doesn't work, I'd like to hear more about, again, doesn't have to be now, but in the future, more about why or how to make sure it can work. What should we do to make it work for us? Because frankly, to say that the current system, even the financing that goes from banks to the CDFIs, that's not working. I guess someone from a panelist mentioned something that it would take us 70 years at this rate, at this pace, to get the financial tools that are needed in our communities and our poor communities and communities of color. So I'm starting from the point of view that it's not working. We're not getting the funding that we should in our communities, period. And unless we have some real teeth into it, it's going to go on and on like this forever. This has been going on since, I was a high school or college activist. I mean, this issue has been out there for, decades and decades. We have to be able to come up with a counter system to the way the current banking system addresses our needs in our communities. And it's our public funding. So the private sector takes advantage of our funds, but doesn't reciprocate in the way that it should with our communities. So it's a broad question, but I don't get that our current system is working at all. It's far from working. And the banks always seem to be in the place of being part of the culprit and the problem as to why our communities don't get what they need, especially small businesses.
Great. Thank you.
Chairman Bradford?
Senator Bradford?
Yeah.
I'm sorry?
Can I respond, Senator Bradford? Fiona?
Oh, Treasurer Ma, go right ahead.
Thank you. So yes, to Senator Durazo, coming from a minority community, we know that if folks are not deliberate about meeting certain goals, it's not going to happen. That's why the California Reinvestment Act passed to encourage more investments in certain underserved communities. I know that when we put more money into certain programs, they really do work. And I'll give you an example for our affordable housing program. I think Assemblymember Chiu mentioned affordable housing, but Governor Newsom last fiscal year allocated $500 million in low-income state tax credits. Then he allocated another $500 million this year. And because of that, we are oversubscribed in our bonds because those 4% tax credits have to be matched with our bonds. And we have a limit of $4.1 billion in how much bond capacity we have. But because of that extra boost, we now are going to see more affordable housing come to market quicker than in the past. So we appreciate the $50 million to the IBank for a small business, the additional $25 million. But when you talk about $500 million, right, that is going to affordable housing, you can see that money does make a difference in moving the needle.
Mr. Chairman.
Thank you.
Mr. Chairman.
Yes.
If I can respond to
Controller Yee, go right ahead.
Thank you. Senator Durazo, thank you for the question. And it is, you're absolutely right. Over time, we have not seen much improvement, but I think that's because of really not a sustained, frankly, strategy or investment in terms of how we strengthen and continue to strengthen CDFIs. And I'm actually very excited about the recovery fund because this is one where, over time I can see the IBank, the fund that's just been launched by the IBank, being closer to what the Bank of North Dakota actually is doing in terms of its vision. And so, and I think really your initial question really resonated with me, and that is, these are communities where a one-size-fits-all doesn't work. These are communities that have special needs. These are communities that need individual attention. And it is really, I think, important to have institutions that understand and are able to have effective reach into these communities. And obviously we're talking about CDFIs, but frankly, if we're not going after that capital, I mean, these large banks are they're tripping over themselves trying to get profits to work for these communities. And California has to step up and get our share. And once we do, we need to figure out how to really elevate the capacity of the CDFIs. I mean, technologically, some of them were very helpful in terms of being the conduit for PPP assistance during the pandemic when that program was in place because they did not have relationships with traditional banking institutions. But many were not helpful because they don't have the economic scale in terms of doing the loan processing. And so this is what we have to elevate. It's just the capacity, being sure that we're directing. I mean, if big banks have money to give for this, I say take it and start really using it to strengthen the institutions we know are going to be able to address the needs of the communities and be flexible about how we're getting that assistance out there.
Thank you. Any additional questions from colleagues? Seeing none, we're going to move on to the next panel. I'm going to see if Controller Yee and Treasurer Ma, are you going to stay online if there are additional questions that come up? Yes, thank you.
Yes, and
all right, thank you. Next, we're going to our other two state agencies, one that has been referenced already. Scott Wu, who's the Executive Director of our California Infrastructure and Economic Development Bank, better known as IBank, and then we'll hear from Manuel Alvarez, the Commissioner for Financial Protection and Innovation. So first up is Mr. Wu.
Chairs Bradford and McGuire and committee members, thank you for inviting me here today to provide background about the California Infrastructure and Economic Development Bank, or IBank. I was appointed by Governor Newsom as the Executive Director of IBank just under a year ago. Prior to that, I worked primarily in the private sector and a stint in the Obama administration on issues related to investment, finance, and innovations in capital access. I'm here today to respond to questions from your committees about what makes IBank programs essential to California through tools like infrastructure financing and the Small Business Finance Center. During the course of this year, I've been quickly immersed in the short and long-term needs of all Californians. We've worked on establishing the governor's vision for a climate catalyst revolving loan fund through the state budget and gratefully received the legislature's support on this front. In April, as mentioned, we quickly established the COVID-19 Disaster Relief Loan Guarantee Program to fill gaps for businesses that had difficulty qualifying for federal funding through the CARES Act. And we are currently collaborating on a public-private financing program to support small businesses, especially those that remain underserved and underbanked. All of these activities took place while IBank continued its day-to-day business of providing affordable financing for public infrastructure and private activity that promote economic development and revitalize communities. So what programs do we offer? After IBank was created in 1994, we started with the Infrastructure State Revolving Loan Fund, commonly referred to as ISRF, which provides low-cost public financing to state and local government entities, including municipalities, universities, schools, and hospitals, as well as nonprofit organizations sponsored by public agencies for a wide variety of public infrastructure and economic expansion projects, and which also create jobs. Financing amounts range from $50,000 up to $25 million, with loan terms for the useful life of a project of up to 30 years. Examples of ISRF financed projects include water and wastewater treatment plant upgrades, venue or airport construction, and street repair and upgrades. IBank also began issuing bonds for infrastructure and other qualifying project financing. Funds from the municipal bonds are issued to finance projects that benefit Californians, such as community centers, schools, bridges, museums, theaters, and qualifying educational facilities. As a conduit bond issuer, IBank issues 4 types of taxable and tax-exempt bonds on behalf of a borrower: the industrial development bonds, 501c3 bonds, public agency revenue bonds, and exempt facility bonds. IBank has expanded its programs to include specialized green financing solutions as well. IBank finances green projects through the iSurf or bond programs, but also has the California Lending for Energy and Environmental Needs, the Clean Center, the Climate Tech Finance Program, and the Climate Catalyst Fund. The Clean Center provides direct loans to the same type of qualifying borrowers as the iSurf program to help meet the state's goals for greenhouse gas reduction, water conservation, and environmental preservation. Financing can be through a direct loan from IBank in amounts from $500,000 up to $30 million. The Climate Tech Finance Program is a partnership with the Bay Area Air Quality Management District that offers higher loan guarantees of up to 90% for projects that help reduce greenhouse gases and go through an expert tech review. The Climate Catalyst Fund was designed to offer flexible, low-cost credit and credit support to stimulate commercial investment in projects that help meet the state's goals for greenhouse gas reduction. This program was launched with an initial funding request from the state's general fund, but was approved without funding because of COVID-19's impact on the state's budget. IBank, however, is seeking to capitalize the Catalyst Fund in new and creative ways because of the urgent need. The creative solutions theme has been pervasive for us over this entire year, as we also face the challenge of providing further support for small businesses affected by the pandemic beyond our existing small business programs, which I will discuss shortly. Needless to say, even with the addition of the COVID-19 disaster guarantees, thanks to the allocation of funding from the legislature for pandemic response, small businesses need far more. So we helped create the California Rebuilding Fund. Just launched on Friday, this program will rely on a new public-private partnership collaborative to address the capital and advisory needs of California's small businesses as they reopen and recover from the pandemic. Among IBank's greatest assets is the efficiency and efficacy of our small team of fewer than 40 staff. IBank is truly a mighty team of experts that help make typically exhaustive financing processes more efficient and less overwhelming. IBank offers in-house legal and underwriting for its clients, streamlining the process and saving the borrower valuable dollars. We're able to finance an economic development project as quickly as 45 to 60 days at below market rates with hassle-free customer service and technical support from start to finish. Each financing application is reviewed extensively by IBank underwriters before a full application and staff report is presented to the board. The board members are all cross-sector experts in their own right, seeking to preserve the IBank mission, fiscal health, and responsibility, as well as promote public benefit infrastructure and economic development projects throughout the state. IBank has been a self-sustaining entity that draws no annual dollars from the general fund. Finally, we understand that you're interested in learning more about the Small Business Finance Center and the California Rebuilding Fund. I'll start with the Small Business Finance Center, which is housed within IBank and operates through its own statutory requirements and policies. We run within that a small business loan guarantee program that offers eligible lenders a mechanism to provide loans to small businesses that may otherwise not be, they might not otherwise be able to obtain under conventional underwriting. In this program, lenders are provided up to 80% coverage on guaranteed loan defaults. IBank works with participating lenders and our network of financial development corporations that cover the entire state to help ensure small businesses can benefit from this credit enhancement program, regardless of their size or location. The Small Business Finance Center also benefits from the diverse staff and financial expertise held by the participating lenders. While IBank approves loan guarantees, borrowers work with these partner lenders directly for the loan, as well as for technical assistance. To participate in the Small Business Loan Guarantee Program, lenders must possess sufficient commercial lending experience, financial and managerial capacity, and operational skills. A lender can apply for enrollment into the guarantee program by completing a lender certification to participate, and IBank will evaluate the lender accordingly. The COVID-19 Disaster Relief Loan Guarantee Program has been essential, especially for those businesses that may not have qualified for federal funds. As of Friday, it has supported 728 businesses totaling more than $24 million of conditionally approved loans. Of those, 367 have been for minority-owned businesses. We're proud to say that 83% of the COVID-19 guarantees so far have gone to target borrowers, female-owned, minority-owned, or businesses located in low to moderate income tracts. With either the traditional or COVID-19 versions, loan guarantees are often the difference between businesses being denied a loan or being able to retool, rebuild, and reopen with accessible, affordable credit. As mentioned earlier, the California Rebuilding Fund originated from members of the Recovery Task Force and is a unique collaboration aggregating funding from private, philanthropic, and public sector sources, including an anchor commitment of $25 million from the state. The goal of the fund is to address the capital and advisory needs of California small businesses as they safely and creatively reopen and recover from the COVID-19 and the economic crisis. This program is built to serve the smallest of small businesses that make up an important part of our economy and will focus on historically under-resourced communities. To be clear, IBank's role is only in providing multiple sources of credit support to crowd in private capital and to keep the cost of funds to the small businesses affordable. Additionally, the network of small business development centers supported by the Office of the Small Business Advocate within GoBiz will be activated to provide tailored technical support and business advisory support to the small business community related to this fund. Our partners offer other services, lending, outreach, training, governance, and capital management. The effort is being supported by a broad coalition of advocates, grassroots, and business support organizations across the state, including the California Black Chambers of Commerce, the California Hispanic Chambers of Commerce, the Cal Asian Chambers of Commerce, the Small Business Majority, the California Association of Micro Enterprise Opportunity, California's Small Business Development Center Network, and California's Women's Business Centers. I hope this addresses your questions. I'm happy to provide any additional information about existing IBank programs, but I should also let you know that we publish our annual report for IBank and the Small Business Finance Center that includes much of this background and details on this data. These are posted to our website and are also sent to the Secretary of the Senate and Chief Clerk of the Assembly annually. Thank you for your time.
Thank you, Mr. Wu. Next up is Mr. Alvarez.
Good morning, Senators, Chair McGuire, and Chair Bradford.
Thank you, Commissioner.
Thank you all. Thank you all for the invitation to meet with you this morning to discuss how the newly renamed Department of Financial Protection and Innovation oversees and regulates state-chartered banks in California. I will outline how the department ensures compliance with the law and maintains consumer safety. I will not be able to discuss or opine on bills that we have not seen or on bills that are outside of the department's regulatory purview. As you know, the Department of Financial Protection and Innovation, formerly the Department of Business Oversight, is the state's main financial services regulator, and we oversee a variety of financial products and services, including state-chartered banks in California. What I would like to do this morning is address a couple of topical areas that were surfaced by the committee. Number one, I'm going to review the department's typical application process in reviewing applications for state-chartered banks. Then I will discuss our typical examination process for state-chartered banks. Then I will turn to how we typically resolve any issues that are surfaced during the examination process. So let me start today by giving you all a brief overview of the application process that all new banks are subject to when they decide to do business in our state. In order for a new bank to open in California, they must submit an application for a bank charter to this department. Using the authority and guidance in the statute, we review the application to determine the character, the reputation, and the financial standing of the organizers seeking to operate the bank. We also review the character, financial responsibility, banking experience, and business qualifications of the proposed bank officers, stakeholders, and directors. when applying for a bank charter, the department requires a significant amount of information, including, but certainly not limited to, the proposed business plan, the proposed slate of directors, proposed officers, employees, and any advisors, the names of those organizing the proposed bank, proposed premises, as well as proposed operations and pre-opening expenditures. The department would review such an application and approve or deny it based on a variety of factors, again, including but not limited to the public convenience and advantage, whether the application poses a reasonable promise of successful operation, whether there's adequacy in the capital structure, and whether proposed officers and directors have the experience and the requisite skills to launch a successful operation. This application and approval process gives DFPI the opportunity to evaluate the bank's proposed business plan, its financial products and services, the proposed markets they plan to serve, and whether or not such operations would be sustainable and meet the specific needs of California consumers in the areas they plan to serve. Now let me discuss a little bit the examination process once an application is approved and becomes part of our portfolio. Once a bank application is approved, the bank will then have to undergo regular examinations to ensure compliance with the law. For the first 3 years of operation, the department conducts a yearly assessment. After that, we move into an exam cycle based on asset size of the institution. Banks that are less than $3 billion in total assets are examined every 18 months, and those with more than $3 billion in assets are examined every 12 months. Those with more than $10 billion in assets are examined annually and with several targeted reviews that are performed throughout the year. If a bank at any time becomes troubled, then we default back to a more aggressive annual examination cycle that includes, in the normal course, of course, in-person visits every 6 months until operations return to a satisfactory level. A troubled bank is one that exhibits some degree of supervisory concern in areas that are related to capital, asset, management practices, earnings, liquidity, and sensitivity to market risk. They may have several violations of law and are not adequately compliant with the law. A bank becomes satisfactory when we are assured that the bank is fundamentally sound and can withstand business fluctuations, and the institution comes in substantial compliance with the law. Let me now talk a little bit about what the department typically does with any issues that arise throughout the course of the examination process. If the department finds that a bank licensee is acting inappropriately, we quickly identify how best to respond, and we have several different options and tools at our disposal. One option is to conduct an informal enforcement action through a memorandum of understanding that outlines formal recommendations the department is asking the bank to take in order to come into compliance. While these are not publicly, nor are they legally binding, they do ensure that a bank explicitly understands the steps it needs to take in order to come into good standing with the department. Alternatively, the department can always take a formal action against an institution if the severity of issues at the institution rise to that level. Such formal action can include any of the following: placing the bank under a formal order, either independently or alongside the FDIC, ordering the bank to cease and desist from violating the law or acting in an unsafe or unsound manner. These actions may cause insolvency, significant dissipation of assets or earnings, weaken conditions, or prejudice consumer interests. We may also send an order relating to inaccurate books or records. Alternatively, we could order the suspension or removal of a person or prohibit a person's participation in the bank's operations. In extraordinary circumstances, the department can even take possession of a bank. All of those variety of tools help to ensure that the department can enforce California law and protect consumers. Lastly, the committee today asked us to discuss any applications that we've received from local governments wishing to create a local public bank pursuant to AB 857. As of today, we have not received any applications. I should also note, however, that the department has not yet completed regulations relating to local public bank applications under AB 857. While we can accept applications, we cannot act upon an application until the application is fully complete. The regulations that we're working on would help clarify what the department is going to need, is going to be looking for for a complete application. The notice of proposed rulemaking should be available on Friday, December 4th. From that point on, we will have 45 days of public comment, and we expect the rules to be finalized within the year. Once those regulations are finalized, we may see applicants begin to file with the department. And I should clarify more specifically, I did notice in the briefing material, in one of the Q&As, there was a response to one of the questions indicating that the department had indicated that we would not accept applications until the regulations were complete. Again, I hope that I've clarified that point. We certainly will review applications. We certainly would review applications, and we would be happy to do so before any regulations are complete. However, any such application would itself need to be complete, and we think it is likely prudent for any proposed organizers to wait until the regulation process is complete in order to begin filing such an application. With that, I want to thank you all for the time, and I and my staff stand ready to provide any additional information or answer any questions.
Thank you, Commissioner. Does any senator have any questions for Commissioner Alvarez or Director Wu at this time? Seeing none in the chamber, seeing no hands up on the screen. All right, we're going to keep moving, and we're going to turn the podium back over to Senator McGuire so he can bring forth our final group of speakers, our stakeholders' perspective. And then we'll open it up for public comment and some questions at that time. Senator McGuire? Okay. I will have a question once you finish.
Thank you so much, Senator Bradford, and again, grateful for the partnership. Ladies and gentlemen of both committees, we're now going to be moving on to our final panel of the day. We want to remind folks, if you would like to be able to participate in today's hearing and would like to be able to offer a comment under public comment, that's going to be coming up after this final panel. We're going to invite you to be able to call in 844-291-6364. We're looking forward to hearing from you at 844-291-6364. You're going to want to enter that code 605-7653. Again, we'll be getting to public comment right after this final panel. All right, members, this is where we're going to hear from stakeholders representing industry as well as different organizations. We're going to hear from Noni Ramos, who's the Senior Vice President and Chief Operating Officer from Enterprise Community Loan Fund. We're going to hear from Robert Wilson. He's the Vice President of State Government Affairs from the California Credit Union League. We'll then bring in Jason Lane, Vice President and Deputy Director of Government Relations for the California Bankers Association. And then we're going to turn it over to Tina Vernon, Nevada County Treasurer and President of the California Association of County Treasurers and Tax Collectors. Let's get into it. We're going to ask that each of our panelists here in this final panel, please keep your comments to 5 minutes. We're running just a bit behind. We're first going to turn it over to Noni Ramos, again, Senior Vice President and Chief Operating Officer for the Enterprise Community Loan Fund. Noni, we're going to give you a prompt when you hit about a minute away from that 5 minutes. The floor is yours, and good morning.
Good morning, and Chair and members, I'm Noni Ramos, and on behalf of Enterprise Community Loan Fund and the California Coalition for Community Investment, I want to thank you for this opportunity to speak today representing the Community Development Financial Institution sector, or CDFIs. CDFIs are mission-driven lenders and investors committed to improving access to affordable housing, health facilities, safe drinking water, small business, and economic development for vulnerable communities. CDFIs include community development loan funds, banks, venture capital funds, and credit unions. CDFIs understand and can quickly respond to the needs of consumers and small business owners and are uniquely positioned to respond to relief and recovery during crisis, as we did during the Great Recession and more recently during the COVID-19 pandemic. CDFIs enable communities to access capital that creates jobs, builds affordable housing, supports small businesses, cultivates healthy food and energy efficiency. CDFIs are an important part of the country's financial infrastructure, working in communities that are underserved by traditional lenders. The California Coalition for Community Investment is a coalition of 40 CDFIs which provide investing and technical assistance across California. Our coalition includes affordable housing and small business lenders, credit unions, micro-lenders, housing trust funds, and other mission-driven financial support providers. Enterprise Community Loan Fund is a national certified CDFI whose mission is to deliver innovative financial products and technical assistance to mission-aligned organizations. Our borrowers acquire, develop, and preserve quality affordable housing that's connected to good jobs, first-rate schools, transportation, and healthy living environments. Since 1990, we have invested more than $1.9 billion in communities across the country. Well-designed affordable homes make up the foundation of our investment approach. And we have built or preserved over 119,000 affordable homes. We connect those homes to community assets that expand resident opportunity, with our financing helping to create over 16,000 educational seats and facilitating roughly 600,000 healthcare visits. For example, we recently worked with a California-based nonprofit affordable housing developer to provide a $1.2 million pre-development loan to construct a 53-unit permanent supportive housing facility for homeless veterans and those formerly experiencing homelessness in the San Fernando Valley. Our pre-development loan allowed the developer to complete critical pre-construction work like architectural drawings and cost estimating, for which there is not otherwise readily available funding. The developer plans to provide on-site services that include education and employment assistance, substance abuse, and health treatment, after-school academic support, and community activities. Another great example of the work of CDFIs is small business lending, like that of CDC Small Business Finance, a California CDFI. They recently helped Army veteran Orlando Talagon launch his own business after a 20-year career in the military. In the beginning, without a steady revenue stream, he was unable to secure operating capital he needed from a traditional lender. But CDC Small Business Finance was able to offer a small business loan and ongoing training and assistance to help him build his business. Our CDFI coalition is watching closely the discussion regarding the potential formation of a public bank in California. CDFIs work to bring capital to low-income and underserved communities, and financial resources from the public bank could be leveraged by CDFIs. These financial resources could include creating a secondary market for CDFI-originated loans, resulting in greater liquidity, and directly investing in CDFIs to strengthen our balance sheets. Both of these activities would allow CDFIs to have even greater impact in the communities where we work.
1 minute.
Thank you again for the opportunity to speak with you today and provide information about the CDFI sector.
Ms. Ramos, thank you so much. Great job. Do appreciate your words today, and thank you so much for being with us on this Thanksgiving week. Ms. Ramos is going to be hanging out, and if we have questions from senators here in just a few moments, we'll be able to ask her here. But first, we'd like to be able to turn to Robert Wilson. Mr. Wilson is the Vice President of State Government Affairs for the California Credit Union League. He's going to be testifying for 5 minutes on this issue. Mr. Wilson, we welcome you to committee. The floor is yours, sir. Good morning.
Good morning, Chair. Thank you very much. And Senators, appreciate the opportunity to speak with you all today. As the Chair just said, I'm Vice President of State Government Affairs at the California Credit Union League. The California Credit Union League represents nearly 300 credit unions, and there are over 12 million members throughout the state. I want to touch on 2 main points during my testimony today. The first is the time deposit program, how financial institutions are involved, and the second is the work that has been done thus far on public banking in the state. The time deposit program was created in 1945 and allows the state treasurer to place deposits with eligible California financial institutions. Eligible institutions include federally insured commercial banks, savings banks, and credit unions who are authorized to accept deposits in the state of California. The goal of the time deposit program is to stimulate the local economies by supporting local financial institutions that serve the interests of their communities. As of August 30th, 2020, nearly 88% of the institutions participating in the program were under $10 billion in assets, meaning small financial institutions. This program benefits these smaller financial institutions by providing them with another source of deposits that they may need to serve their communities. And the program generally offers better rates than available from other sources. The time deposit program benefits the communities by stimulating growth in small businesses and helping communities thrive by increasing the number of mortgage loans, auto loans, and other lending in the community. The proposal to change the state IBank into a public depository institution would have taken these important deposits away from these small local financial institutions within 5 years, and thus taking away from some of the communities that they serve. The goal of the public bank is to serve the communities, which is what credit unions and community banks and CDFIs are currently doing with these deposits. I want to shift gears and briefly discuss the work that has been done thus far on public banking. As we've talked about a little bit already, last year the legislature passed AB 857, which allows cities and regions to create their own public banks after submitting a plan to the Department of Financial Protection and Innovation. This was a monumental piece of legislation, one that pretty much everyone in this virtual room of ours worked very diligently on. California Credit League was no different. We were able to move to a neutral position after a few rounds of amendment on AB 857, which we appreciate. When the IBank proposal popped up last year, my member credit unions had one big question: why now? Even if we were not in a COVID shortened session, my member credit unions were still left wondering, why can we not see how AB 857 pans out? Not even a year post enactment date, we're going back to the well on public banking. Are we declaring local public banks a success already? Or was it realized that without the state public bank, the local model was not possible? With AB 857, there is potential for a partnership between local financial institutions and the local banks, and we strongly believe that we should wait and see how that plays out before we expand the scope of public banking in California. Thank you.
Mr. Wilson, thank you so much. We appreciate you being with us here today. Mr. Wilson will also be hanging out if we have questions or comments from the senators in just a few moments. We have 2 additional panelists who will be participating in this final panel. Let's go to Jason Lane. Jason Lane is Vice President, Deputy Director of Government Relations from the California Bankers Association. Mr. Lane, we welcome you to committee. You have 5 minutes, and I'll give you a 1-minute prompt. Mr. Lane, the floor is yours.
Thank you, Mr. Chair. Appreciate the opportunity to talk on this matter. We agree with the prior comments that the legislature has already addressed the issue of public banking. Local municipalities asked for the ability to create public banks, and the legislature granted them that authority this very last legislative session. While the proponents of public banks have discussed its virtues, we still don't believe that the perceived benefits outweigh the risks, particularly when we consider the general fund is the risk. To help illustrate this view, I'd like to take a moment to speak about the current environment that banks find themselves in right now. And I apologize in advance for using bank terminology. While there are plenty of banks offering services to California communities, there's a great deal of consolidation within the industry right now. Interest rates are at historic lows, and they likely will be for quite some time. This has resulted in an industry-wide decrease in net interest income, which is an indicator of a bank's profitability. When a bank's net interest income decreases while the bank is trying to maintain adequate capital ratios, one of the only levers a bank can pull in an effort not to lose money is an expense reduction. So a bank's efficiency ratio becomes very important. This ratio is a measure of a bank's operating expense. So it's a very challenging environment for the industry right now, and a state bank is going to have all the same challenges. One of the questions before the legislature is, can a state bank be efficient enough to not lose money in this environment, which can absolutely happen? A public bank's overhead and cost of funds are going to be the same as a private entity. And if that public bank is now going to make low interest loans as it is proposed to do, then it's going to have even more of a compressed net interest margin and have to be even more efficient. Layer on top of that, the fact that the proponents are advocating for this public bank to engage in some fairly risky lending activity. So now the bank is going to have to set aside even more money for loss reserves and provision for it according to regulation. And that's going to eat into its capital. We don't see how a public bank operating in this manner outlined by the proponents, and certainly as described in AB 310, can survive in this environment. Certainly a private entity could not. And this is exactly why you're seeing so much consolidation in the industry right now, because it's a very challenging environment. You don't see a lot of new banks starting up for this particular reason. Now, we are certainly encouraged to hear that public bank proponents accept the idea that a public bank needs to be regulated, though there seems to be some dispute as to whether or not deposits would be insured, as AB 310 did not require that. We believe that regulation is vitally important to the safety and soundness of the banking system, but we also believe that a public bank must be regulated in the same manner as a private institution. As to deposit insurance, since these are in essence taxpayer dollars, really general fund revenue, then they should absolutely be insured. But what you're being asked to do as a legislature is not just consider the formation of an entity that takes deposits and makes loans, but you're also being asked to consider the entire infrastructure to support that entity. For example, one of the areas that the banking industry has excelled in is cybersecurity. Banks often know when fraud has occurred on an account before the customer does. They use very complex algorithms and fraud filters to detect fraud. You just don't see a lot of data breaches occurring in the banking industry, but there's a cost to protecting customers. The largest banks are spending north of $300 million a year in IT infrastructure and cybersecurity. So a legitimate question before the legislature now is, does the state of California have the IT systems to support a banking network? Again, this is just one example of the numerous challenges a public bank will have. Then there's the notion that a public bank can better serve its communities than private entities. But a state bank would have no brick and mortar presence in their communities. We understand that the proponents for public banking contend that they will partner with local community banks and credit unions, but in order for a public bank to exist, it would need to take deposits from state and local governments. And these deposits are currently used by community banks primarily as a source of liquidity, which is then going back into the communities through lending products and services. That would not be a partnership in that sense. And in fact, it would be devastating to some community banks. They won't be around for that partnership to come to fruition. And this is a point that I can't emphasize enough. What is being proposed is to take away vital liquidity from community banks that currently have a brick and mortar presence in their communities and transferring it to a state entity that has no brick and mortar presence in the community. That's a loss to the state banking charter system, but it's also going to be a major loss to your communities.
1 minute.
I appreciate the opportunity to talk today, and I'm available for any questions you have.
Thank you so much, Mr. Lane. Mr. Lane wins Pandemic Beard of the Day as well. My goodness, sir, it's good to see you. It's been a while. Thank you so much. We're really grateful for you participating today, sir. Thank you. Ladies and gentlemen of the committee, we're now going to be moving on to Tina Vernon. She is the treasurer of Nevada County. Plus, she's the president of the California Association of County Treasurers and Collectors, Treasurer and Tax Collectors. Thank you so much, Madam President. We're grateful that you're with us, Ms. Vernon. Good morning. The floor is yours. You have 5 minutes, and I'll give you a 1-minute prompt. Good to see you again.
Well, good morning, Honorable Senator McGuire and Senator Bradford. I am Tina Vernon, Nevada County Treasurer and Tax Collector and current CACTAC President. I am here today, though, to represent the views of the CACTAC Association, and I do thank you for hearing our testimony today on the subject of public bank funding. First, I want to be clear to the group that the California Association of County Treasurers and Tax Collectors is not against the idea of a public bank, and we do fully understand the motivation of the public banking advocates. There are counties right now working with public bank advocates to complete the studies needed to see if a public bank is viable in their communities. We all serve the communities in which we live, and we can envision the potential benefits that a well-established public bank can provide to our communities. Where we do differ, though, stems from how a public bank is funded and the risk associated with the birth of a public bank. We have an example of a public bank that works. We've all heard about the Bank of North Dakota. The successful Bank of North Dakota was established in 1919 and took over 30 years to become sustainable. And it does not serve the same population of customers that the proponents in California are seeking to serve. And local agencies can voluntarily deposit funds into the bank. Current research shows that a public bank in California, once formed, could take about 10 years or more to become sufficiently solvent enough for local agency deposits. And this process of becoming fully regulated could take years and be extremely expensive. This long and expensive process is why other public banks have failed and is why we are hesitant to commit local agency taxpayer dollars. Throughout the discussions on AB 857 and then again with AB 310, we've heard public bank proponents propose the use of county deposits to fund these banks. And time again, we've told them that we just could not support this. Each of us takes an oath of office to serve and protect. Treasurers from around the state also take an oath to uphold the prudent investor standard, which states that we must invest funds so that first and foremost, the safety of principal is upheld. Secondly, that we meet the liquidity needs of our communities, specifically our local schools, our fire districts, public safety departments, county hospitals, etc. They all must have the necessary funding at their fingertips when needed. To put a finer point to it, think about the costs counties and schools incurred during this pandemic alone. There have been unexpected and extraordinary costs for PPE, teleworking, social distancing measures, everything that distance learning requires. All this required money, and while we believe there's going to be reimbursement at the federal level, it is the responsibility of county treasurers to ensure that this liquidity and access to cash is available immediately if needed. An entity or investment that would lock up county or school cash for a decade or more is not a prudent way to manage those dollars. It is important to note that funds held in county treasury pools are not excess funds. They are idle funds that will be called upon at some point in time to pay for salaries, capital projects, and equipment needs to serve our communities. These funds are part of a publicly adopted budget developed and approved by our County Board of Supervisors, school boards, city councils, and governing boards of special districts. In accordance with state statute, county treasurers cannot invest in securities with maturity dates greater than 5 years due to the short turnaround of these funds. High liquidity needs require county treasurers to have tight and accurate cash flow projections to ensure that cash is sufficient for all expenditures. To achieve this, counties and cities around the state deposit monies into the state local agency investment fund, a highly liquid and risk-averse pooled money account that provides same-day liquidity to public entities. As I understand, the proposal that the legislation is considering today includes the use of county and city dollars that are on deposit with PMIA and LAIF. The use of these funds to provide the capital needs of a public bank will tie up our local agency funds for periods longer than the 5-year statutory limit. They would expose county portfolios to larger risk and potential loss of principal and would render these funds unavailable for immediate withdrawal by a local agency, thus threatening local agencies' budgets and our services to our communities. Right now, we've seen increased property tax delinquencies, and we will undoubtedly see more as we pass the December 10th deadline. And yet we're in a time where our constituents need more services. So many more are seeking mental health, physical health, and public assistance for the first time in their lives.
1 minute.
Thank you. Treasurers around the state are shifting their portfolios to increase liquidity, preparing for the cash flows shortages that we will need and definitely suffer through for, getting through this pandemic and wildfires. We cannot afford to tie up our funds for long-term investments in a public bank. If these funds were to be granted for this use, the likely outcome will be that counties and local agencies will remove their deposits from LAIF and PMIA funds. If this should occur, the money that a public bank is needed to succeed will not be available and the efforts will fail. It is important for proponents to look for funding elsewhere, and after hearing testimonies by Controller Yee and Treasurer Ma, it appears that there are some viable alternatives out there. We know public banks provide worthy services, but financing capital with public agency funds is not prudent. CACTAC does not support it, and the conclusion of the overwhelming majority of my membership would simply move their money out of LAIF and PMIB should these funds be secured for public bank. We require capital, we do not provide capital. For these reasons, CACTAC respectfully opposes the use of funds from LAIF and PMIA, which is comprised of the state and local government dollars, to provide the funding for a capital bank. And if I could just take one moment before I conclude today, I did want to thank Senator Moorlach for his work on this committee. Much of what the county treasurers and tax collectors do is hard, serious, and sometimes tedious work, and collecting taxes doesn't always make us the most popular elected official in county government. But the work is really important, and what we do is in the service of every Californian. Counties are implementing arm of so many state programs, and having a former county treasurer serve in the Senate, especially on your committee, Senator McGuire, was a stroke of luck for county treasurers, knowing that a member of your committee intimately understood the work we do and how legislative proposals would work or not when it came time to implement those proposed laws. Thank you, Senator McGuire, for inviting us to participate today, and thank you, Senator Moorlach, for your service. And I thank you all for your time today.
Thank you so much, Madam President. That's Tina Vernon. She is president of the California Association of County Treasurers and Tax Collectors. With that, a very special send-off to Vice Chair Moorlach. Ladies and gentlemen of committee, to those who are participating remotely, what we'd like to be able to do is turn it over to Chair Bradford to be able to kick us off on questions, comments on this portion of the hearing. We'll then go check in with Vice Chair Moorlach after Senator Bradford. Then we'll go to those who are participating remotely. Then we're going to open it up for public comment. If you would like to be able to comment on any of the items that you've heard today, here's the phone number. We look forward to hearing from you. The number is 844-291-6364 with a code of 605-7653 up there on your screen now. So we are now going to turn it over to Chair Bradford. Chair Bradford has a question, comment for the Controller's office. I believe that Controller Yee may have had to adjourn herself for another meeting, but if that's the case, we're going to ask both Lynn and Andrea to please turn on their cameras to be able to address the issue that will be advanced by Mr. Chair. Chair Bradford, the floor is yours.
Thank you, Mr. Chairman. And I did have a question, and I apologize if I've allowed Controller to leave. And it was really on the CDFIs. And she gave a great presentation, very thorough information in regards to them being a viable alternative. I guess my question would be, she seemed to stress that in order to stand these entities up, they needed a partnership with the banks. And my concern or question is, it's the banks are why we're here today needing alternative entities and agencies or financial institutions to serve these communities. So where does she feel that the banks will play a greater role with CDIFs than they're doing right now with the direct clients or business entities that need loans? And what role should the state play in help standing up the CDFIs, I should say. I said CDIFs, but CDFIs in the future. So does the state have a role in helping stand this entity up? And how do we get the word out to the general public that these funds are available and these entities are available to reach out? Because most folks just deal with traditional banks who are turning their backs on these customers.
Thank you so much,
Chairman
Mr.
Bradford. I'm happy to join again to respond to your question, and thank you for the question. CDFIs are they're supported by a number of different sources, including the mainstream banks. And what I would say is certainly the mainstream banks can be a source of capital for CDFIs. But I think we ought not just veer away from the unique attributes of CDFIs as was just provided by Noni Ramos with the Enterprise Community Loan Fund. It's really what's missing is the expertise in the communities that we're trying to target. And, the traditional banks are, I'll give you an example. And this is not meant to offend Mr. Lane with the Bankers Association, but I see this happen from time to time. I remember, my office does a lot of work in financial literacy and education. When I see banks, kind of taking up that space and going into communities and providing financial education, I have to say, sometimes it feels like it's just checking off the box. For a bank to come into a community, doesn't even recognize, what the attributes of the community are, including non-English speaking, and yet they're providing this education, thinking that they fulfilled, some requirement. That to me is just kind of a disconnect that I think really is the role that CDFIs can play. CDFIs, as I said, are funded from a number of different sources: foundations, the federal CDFI fund, private capital, and during this pandemic, I think about just all of our corporate CEOs stepping up, and I often wonder what would have happened if their financial contributions had been targeted and directed to CDFI that actually could get dollars into the most affected communities. Our minority communities that have had to bear the most disproportionate impacts of the pandemic and certainly this recession. And so, there's going to probably need to be a relationship with the traditional banks. And, frankly, capital is kind of not all that, there are only so many sources of capital. And what I'm trying to really convince the committee is that the capital that the proponents are looking at is the state's working capital from which we have to meet our current and future obligations. And I don't think any of us want to be in a position of having to decide whether we're going to help a family with their Medicaid benefits compared to directing dollars into a CDFI. That's not the right question to ask. But over time, and again, I want to just say this: the beauty of a CDFI, and if we're talking about equity, and this is true regardless of just what area we're talking about. The long-term goal of equity is to build and lift up communities, but also to build resilience. That over time, I hope these CDFIs are really robust institutions that we're going to help strengthen, that are going to continue to be a presence in those communities, that understand the unique needs of communities, that we're building a workforce that actually could work in the CDFIs from members of the community, that we have the ability to lift them up in terms of technological capacity so that they can perform with economies of scale in terms of how they're processing loans and really be an alternative to the mainstream banks. But I would say to your question, Chairman Bradford, I have to say when Jamie Dimon with JP Morgan Chase talks about tens of billions of dollars that are going to go to underserved communities, I look at that and say, where's California's share? And I think that's what we have to think about in terms of how do we access that capital that's not already being committed for current and future obligations.
Just real quick, do you see the state playing a role in some of the technical assistance or monetary assistance going forward?
I think, what I've had a dream about, Chairman Bradford? I have dreamt about our Latino Legislative Caucus, our Black Legislative Caucus, our API Legislative Caucus, joining hands and really issuing a challenge to our tech companies here in California and what they can do to really help lift up the technological capacity of CDFIs. For that to be, we're here in California, we have the tools and we have the resources. So, and I would say that's probably the single most important first step is, just helping these institutions build that capacity and to be able to have the tools so that they can actually be on a footing where they can serve their communities like any traditional bank.
Thank you.
Thank you so much, Mr. Chair. Thank you, Madam Controller, very much. Ladies and gentlemen of the committee, we're now going to turn it over to the Vice Chair of Governance and Finance. Senator Moorlach, the floor is yours, sir.
Thank you, Mr. Chair. I want to thank Tina Vernon Nevada County Treasurer Tax Collector, for her kind remarks. I had fun working with one of her predecessors, Chris Davis, when I served as a Treasurer Tax Collector. A lot of fun memories. Also want to thank Jason Lane with the California Bankers Association. He was brutally honest regarding the current banking environment and appreciated his comments. Since the controller is on the line, this is great because I wanted to focus as well as Senator Bradford on the Community Development Financial Institutions, the CDFIs. I was just curious, Controller Yee, if the Legislative Analyst's Office or the State Auditor has ever done a review of the CDFIs that we might see in print that we could review.
Madam Controller.
Yes. Thank you, Chairman McGuire. Thank you, Senator Moorlach. I am not aware of any recent reviews or examinations of CDFIs done by any state entity. I think it's certainly something that we can request, and certainly the legislature could request as part of its oversight role. These are private entities, but certainly with respect to how well they're serving the communities in which they are located is something of broad statewide interest. And I would venture to say that we're probably going to see a lot of varying experiences depending on where the CDFIs are located, what their areas of emphasis are with respect to how to lift up the communities in which they serve. So, Senator Moorlach, I have not seen anything recent. And there probably are some federal, I would say there probably are more likely federal reviews than there are state level reviews.
Well, thank you. I'm kind of thinking that maybe even the Hoover Institute or Commission, Commission would be a good topic, Mr. Chair, if we could encourage the Hoover Commission to review CDFIs as you're reviewing this public bank idea. You might, because what's coming out of the testimony, Mr. Chair, is that the only benefits of a state bank would be leveraging opportunities for secondary markets, and at least that's what I heard from Ms. Ramos. And so I'm thinking a state bank, based on some of the testimony, is redundant, and the benefits that could be derived seem like a small benefit based on, building an intimidating new bureaucracy, and the benefit packages for employees at the state level are a little different than in the private sector. So I just want to bring that up. But Controller Yee, thank you for your testimony. I liked your quote that it's reinventing the wheel, and thank you for providing an alternative and giving us some more research to do. Thank you, Mr. Chair.
Mr. Chairman, if I could
please proceed.
Moment, I just wanted to add my congratulations to Senator Moorlach for just really a stellar career in public service. And just as an aside, he really was someone who was the expert in part of my career early on in my public service, and that was to essentially resolve the Orange County bankruptcy at the state level. And so, Senator Moorlach, your reputation precedes you, and I know that as we're talking about risks with respect to investments, you have been a premier expert in this field, and continue to just be grateful for your service to this committee and to the California State Senate and all best wishes.
Thank you, Madam Controller. Appreciate that.
Thank you so much, Madam Controller. Very grateful for those words. We truly appreciate that. Ladies and gentlemen, committee, we've heard from the Vice Chair, we've heard from the Chair. We now would like to be able to go to those who are participating remotely, say good morning once again to each of the senators. We'd like to be able to see if there are any senators for this panel have any questions, comments, or concerns that they'd like to be able to advance. We'll give you a few moments to be able to raise your hand to see if there's anyone who would like to be able to comment anything you may have heard on this final panel. This is going to be final call for questions or comments for participating senators. Final call for participating senators from each committee. Senator Durazo, did you want to chime in on this?
Yes.
All right. The floor is yours, Madam Senator.
Thank you. And I really appreciate all the panelists and your your points of view. I read in the notes of the committee background, there was sort of this chart of the models 1, 2, and 3, and how much money and over how many years it would take to break even. I want to look into that a little bit more, but I was hoping there'd be more of that kind of a breakdown of what it would take, what would be. There was a lot of comments about the risk that the state would be taking, and obviously we want to look at that, but that would seem something much more that we should dig in a little bit more. What do those mean? What do those models mean? And in order for us to, consider if there's a risk and how much of a risk. But it seems to me there's not much of a competition here with the banks as far as investing in our communities, investing in the issues that our communities are suffering from. I mean, affordable housing is an extraordinary crisis. Homelessness, an extraordinary crisis, and yet we can't somehow use our funds to assist in solving that crisis, at least not on the level, I shouldn't say not using it at all, but at least not on the level that we could be and that we should be. I haven't heard enough about what those risks are other than a general, we're at risk. And it's kind of like spooking us away from the idea rather than dig in with the issue and let's solve that issue. Let's address that issue versus, no, we can't do it. We can't do it. There's too many of these can't do. So that's just, Mr. Chair, my general, response to this. But I do appreciate everyone and your point of view that you've contributed here. And lastly, and maybe Assemblymember Santiago could address the issue of the PMIAs, because that keeps coming up, and I thought that wasn't included in this legislation. So maybe in your final remarks, you could include reference to that. Thank you, Mr. Chair.
Thank you so much, Senator. Senator Durazo, we always appreciate your comments, and thank you for participating. And I'm going to look to Assemblymember Santiago, if we could take the senator off of mute there. Assemblymember, do you want to make a comment to respond to what Senator Durazo just asked you, or do you want to wait for closing comments? It's up to you, sir. In the interest of the committee's time, I could wait till closing comments. Okay, that's great, sir. And we look forward to hearing that response from Assemblymember Santiago to Senator Durazo here in his closing comments. I don't mean to keep looking to my left. I just want to, I'm looking at the screen here. I don't mean to not look straight ahead, but I wanted to see if there is anyone else, any senators who would like to be able to ask questions, comment, have a comment, concern. All right, let's go to Senator Caballero. Good morning, Senator Caballero. The floor is yours.
Thank you very much, Mr. Chair. I appreciate it. Let me just say that I really appreciate all of the testimony, and I think it's important to recognize that there is an opportunity to create resources that will help and make the major investments that we're looking for in communities of color and financially struggling communities. And if there's anything that this pandemic has magnified, it's the differences between those that have and those that have not. And frankly, the ones that are suffering the highest infection rates are those that have not, and for a whole variety of reasons. But what I heard here today is, I guess this is just a summary, is that we've set up some opportunities for some municipal banks, and it's an experiment really to see whether any of these entities actually become reality, whether there's an interest in investing in the infrastructure necessary to be able to put one of these together. And let's be very clear about it. It's an incredibly huge investment of time and resources in order to be able to create an entity that has that has the wherewithal to be able to do some of the things that we think are important for our community, whether it's financial literacy, whether it's low interest loans, whether it's small business loans. It's an investment and it's going to cost. And what I think I heard today, at least from the partner, well, and that if we do this, it's going to be a partnership with a number of different entities, whether they be banks or credit unions, and then cities and counties. And so that's the framework that we're trying to figure out how to do this work in. And then the financial part of being a city council member, having been a city council member for 15 years, is that you want to put your money in a place where you have the liquidity, you have the resources at your fingertips when it comes time to make the payments that are required of you, and that it can be fiscally very sound. You have that responsibility, and you have to ascertain that. And so what I heard in terms of the stakeholders is that there's some real concern with the state, including our own treasurer and controller, is wading into this area when there may be some other alternatives that make more sense and that don't put us at such a high risk. And so I really appreciate that, because I'm looking for solutions. I'm like Senator Durazo. I don't want to just hear, you can't do it, you can't do it, you can't do it. There have to be some alternatives. And I do appreciate what Controller Yee had to say, which is that maybe it's time for all of our caucuses to get together and to say, we want any investment, whether it's CRA or CDFI investment, to be responsive to the needs in our community and be very specific about what our expectations are, and go in unity to really push that. So anyway, I really appreciate this hearing, because I think it's helped to crystallize in my head some of the issues that we need to take into consideration if we're going to take the step to make a major investment like this. So thank you very much.
Thank you so much, Senator Caballero. Grateful for those comments. Ladies and gentlemen of both committees, we'd like to be able to look.
Sorry, you know what, Mr. Chair, very, very briefly, I also want to give a virtual hug to Senator Moorlach, or give him a virtual handshake. It's been a pleasure being a committee member with you, and we're going to miss your expertise. So thank you very much for your service to California.
Senator, thank you so much for adding that in. That is very grateful. Mr. Vice Chair, did you want to respond to that?
Caballero, so thank you, Senator Caballero. I'm going to miss working with you. You're wonderful.
Thank you, Mr. Vice Chair. All right. Closing comments, we're looking for final comments. Final comments from members, final comments from senators on this panel. Hearing and seeing none, ladies and gentlemen of committee, we now would like to be able to go to public comment. I would like to be able to quickly describe how public comment is going to work here today. There's going to be 3 ways an individual can participate in public comment. Each individual is able to receive 2 minutes. I'll keep track, and I'll give you a 30-second prompt. Please don't take me being rude. If I say 30 seconds, I just want to make sure that you know where you're at in regards to your testimony. We're going to start first here in the chambers. We do have an individual who would like to be able to speak here in the chambers. Then we're going to go to room 112. And then we're going to go ask those participating on the phone line to be able to provide their comment. If you would like to call in, we welcome your comments here. 844-291-6364. Hit us up at the number and the code on your screen right now. We're taking comments via the telephone, 844-291-6364. All right. Ladies and gentlemen, we're now going to be going to our first set of public comments. We're going to welcome individual here in the chambers to committee. If you don't mind, sir, just give us your first and last name. The floor is yours. You have 2 minutes, and thank you so much for being with us here on this Thanksgiving week. The floor is yours.
Good enough the way God made you, Senator Chair McGuire and Vice Chair Senator Moorlach. You don't need my thanks, but thank you. I should say I admire your courage and your clarity. My name is Patrick Bankert, and I'm from Sacramento, California. just like you all, I love family, community, and country. And there's a woman who I really love too, but I think that sometimes being away from someone you love makes you realize how much you love them. I was on my way here, and I seen a couple of soldiers having a lunch. I saw them, and I wanted to, say that I honor them for their service and their courage for what they've done for our country. And I happened to have my guitar and my amplifier, so I asked them if I could sing them a song, because I have a guitar and amplifier I like to sing. It's called Born in a Small Town by Staff Sergeant Mills, the 82nd Airborne Division. And it's just about family, community, and country. And afterwards, they said they kind of liked it, and it meant a lot to me. It meant so much to me because I was kind of embarrassed because, I'm no hero. I'm actually nobody. I'm nobody special. But, I'm trying to do something to work for families and community and children. The thing is, I should say that what makes y'all so special to me is walking through the Capitol and seeing the wings, and I feel like there's a lot of, fire and also a lot of power here. And I admire the government, I admire the military, I admire everybody who does so much good for our, our community. There's been some difficulties in my life, and I'm sorry to say, but basically, it's not the coolest story, but for about 5 years, there's been people giving me a hard time, and I think it might be some information security analysts, and I might just be a fool, but I'm trying to do the right thing because I don't want it to happen to anybody else. But basically, I've been in terror and horror and helplessness for, oh my goodness, it's embarrassing to say, but 11 months straight, 24/7, 6 months straight, 24/7, 5 months straight torment, and people have broken into my apartment and put into a topical drug on my doorknob that was kind of like a brain virus that basically created a kind of havoc on my sense of reality and my love for God for about 10 minutes. And it made me realize, that soldier that I met, there isn't a soldier, I think, alive who's been through that kind of pain. And I'm nobody special, I'm nobody, but like I said, all I'm doing is trying to work for families, community, and country, and I'm trying to do what's right. I admire y'all so much, and I admire that y'all would let me speak.
About 30 seconds. I'm sorry to interrupt. 30 seconds.
Here, for the people who have given me a hard time, these information security analysts are, maybe I'm wrong, but that's what I think. Here's what, they gave me, torture and pain, and I don't know why, because I'm an innocent man. But here's what I have to give to them: complete permission to be as honest with me as possible. And I should say that I think that what is absolutely true is that each of us is a unique, precious, never before seen, never again seen creation of God, that God made all of us worthy of his love. And I'd just like to say that I'm claiming the First Amendment of the Constitution, freedom of mind and conscience, protection from discrimination, and that would be GVC versus Bell. And I should say, hope y'all know you're perfect the way God made you, always have been, always will be, long as we stick to our morals and values. God bless you and your families, perfect the way God made you all. Thank you so much.
Thank you so much for joining us. Happy Thanksgiving, Patrick. Really appreciate you being here today.
Wish y'all well.
All right, thank you. Ladies and gentlemen, we'd like to be able to see if there's anyone else here in the chambers who would like to be able to speak. Hearing and seeing no one, ladies and gentlemen, we now would like to go to room 112. Room 112, we're going to see if we have anyone in room 112. That room is lonely. No one is in room 12, so we're going to bring it back to the chambers. We want to remind folks, if you would like to be able to participate in this public comment section of today's hearing, we welcome you. We look forward to hearing your comments and your questions. 844-291-6364. That's the way you can participate here today. 844-291-6364. Give us a call. We have about 8-9 folks who are in the queue prepared to talk. So what we'd like to be able to do is I'll just say good morning. If you can just give us your first and last name, you have 2 minutes, and I'll give you a 30-second prompt. All right, we're ready to go. I just got the high sign. Yes, we are. Let's go to our first caller. Good morning. You are in committee. The floor is yours. You have 2 minutes.
Thank you. And that line number is 82. Your line's open.
Hello?
Hi,
yes, go ahead.
Good morning. You're in committee.
Good morning, Chairman McGuire. Okay, good morning, Chair McGuire. Good morning, Chair Bradford, members of the committee. I'm Trinity Tran on behalf of the California Public Banking Alliance. 80 endorsing organizations across the state of California, and over 220 delegates of the California Democratic Party, we strongly support the creation of a state public bank. California is now facing record-breaking deficits. Our cities, our small businesses, our communities need urgent economic relief, and a state public bank will enable us to leverage public funds to rebuild and recover. And as Governor Gavin Newsom said on his gubernatorial campaign trail, we must break Wall Street's chokehold on state finance by developing our own state bank. Thank you so much.
Ms. Tran, thank you so much for joining us. We're really grateful. Madam Moderator, if you want to get folks into the queue and make that announcement, and then we'll go to our next caller. Madam Moderator, if you want to make the announcement.
Thank you. And if you'd like to have public comment, you may do so by pressing 10, 10 for any public comment. And the next line we'll go to is 93.
Good morning. You're in committee.
Yes. Thank you. My name is Susan Harmon. I'm with the East Bay Public Bank, Friends of the East Bay Public Bank, and we strongly support the idea of a state bank. And I'd just like to say farewell to Senator Moorlach, who has been a worthy adversary. Thank you.
Ms. Harmon, thank you so much. He just gave the thumbs up, so thank you, Ms. Harmon. Have a wonderful Thanksgiving, and thank you so much for calling in today. Madam Moderator, next caller, please.
Thank you. And the next line will be 94. Your line's open.
Good morning.
Hi, can you hear me?
Yes, you're in committee. Good morning.
Hi. Thank you. Good morning. Jennifer Tanner, speaking on behalf of Indivisible California State Strong, over 70 groups representing 40,000 constituents in California. I'm also speaking on behalf of Indivisible California Green Team, Fossil Free California, SoCal 350, 350 Ventura County Climate Hub, in strong support for a state public bank. Thank you so much.
Ms. Tanner, thank you for calling. I hope you have a wonderful Thanksgiving. We appreciate you taking the time. Madam Moderator, can we go to our next caller, please?
Yes, thank you. And that line will be 99. Your line is open.
Good morning. You're in committee. Good morning, line 99. Last call for line 99. Madam Moderator, can we please go to our next caller?
Yes, that will be line 105. 105, your line is open.
Good morning.
Hello, my name is Ben Huck. I'm a delegate with the California Democratic Party for Assembly District 70 and a member of Public Bank Long Beach and the California Public Banking Alliance. I strongly support a California state public bank as a systemic solution to a broken financial system. For-profit banks that have contributed to the problems in our communities are not the solution. We need bold, urgent solutions, and a state public bank is one of those critical solutions. Thank you very much.
Thank you so much for calling in today. We appreciate you taking the time. Have a wonderful Thanksgiving. Madam Moderator, next caller, please.
Our next line will come from 107, 107.
Good morning.
Good morning. Good morning. My name is Nam Lay with UFCW Local 770. I would like to extend my sincere thanks and appreciation to Chairman Bradford and McGuire for conducting this hearing and important conversation, a really important discussion. I want to say thank you to all the senators for your questions. I've enjoyed hearing them and taking many good notes for future discussion. On behalf of over 150,000 frontline workers of the UFCW in California, we strongly support the creation of a public bank for the state of California. In this moment of crisis, grocery and retail drug workers are struggling in very basic ways as essential employees. They are the most vulnerable to contracting COVID-19, which could mean decreased wages, extended leave, and even death. While the state of California has done much to improve their conditions, there will be more serious negative consequences to the endurance of this pandemic. A state public bank will carry out its activities by partnering with community banks and credit unions and lend responsibly to localities to increase the availability of credit in areas that Wall Street banks are not serving, especially historically underserved communities of color. This could support greater access to healthy foods and unionized grocery stores in communities that have not had access and suffered the greatest loss during this pandemic. This is a moment of reckoning. We must be bold, assertive, and creative in our approach for the future of our state. California is a leader, and we are proud to stand with Assemblymember Santiago and Chiu in leading us forward. I thank you all.
Thank you so much, and please pass on our sincere thanks to all the members of USCW during this holiday season who are working the front lines. We are very grateful. Thank you for your phone call today. Madam Moderator, let's go to our next caller, please.
Thank you, and that comes from 108. Your line's open.
Good morning.
Good morning, Chair McGuire and Chair Bradford. My name is Justin Rauza, and I'm speaking on behalf of the Worker-Owned Recovery California Coalition today. We appreciate this discussion and definitely much supportive of the discussion around public banking as it relates to one of the end uses and potentially that being California and the state's support around worker-owned conversions. As many of you know, many of our small businesses were already under threat of closing because of the silver tsunami, and that has accelerated due to the pandemic-induced recession. So we thank you for holding this very informative joint hearing, and again, seek to continue engaging on this issue. Thank you.
Thank you so much. We're grateful for your phone call. Happy Thanksgiving to you. Madam Moderator, let's go to our next caller, please.
Thank you, and our next line will be 73.
Hi, I am Steve Satig. I'm representing the Public Bank Pomona Valley. We're a group that's existed for about a year, including about 10 active members, about a mailing list of 70. We've been studying this and want to urge strong support for this public banking in our area. And as a state bank as well, we think it could really smooth the road for the local and regional banks. We especially encourage our Senator Portantino to support this movement. Thank you.
Steve, thank you so much. Have a great holiday. We appreciate you calling in. Thank you so much. Madam Moderator, next caller, please.
The next line will be 121.
Good morning. Am I audible?
Yes, you are. You're in committee. We welcome you. Good morning.
Thank you. Good morning. My name is Roseanne Witt in Ventura County. The finance industry failed California residents and small businesses. Our climate emergency is escalating, but traditional mainstream banks continue to finance carbon-extractive industries that are devastating our communities statewide. As a Woolsey Fire survivor and founding member of the Thousand Oaks Climate Coalition, it is clear to me that the banking system that keeps our home, where they can be invested in climate resilience and other. As such, I strongly support California State Public Bank. Thank you for your time, and happy Thanksgiving.
Hey, have a great Thanksgiving, Ms. Van Witt. Thank you so much for calling in today. We're very grateful. Madam Moderator, let's go to our next caller.
Our next line will come from the line of 68.
Hello there. My name is Richard Gerling. I am a member of United Educators of San Francisco, and also have been in the SF Public Bank Coalition and the California Public Banking Alliance. My field is economics. That's what I taught for 30 years. And I'd like to say that I strongly support a public bank, and I appreciate today's hearing. Although I must say much of the comments today are on why we don't need a public bank and why it won't work. I would like to draw the attention to the senators that there currently are public banks throughout the world, not just in North Dakota. Germany has a huge public financial institution called the Sparkassen, and it would be worth the legislators to study that and see how they've made it work, because they have a network of hundreds of banks, and they've been in operation for 200 years. So I would encourage you to do that, and also to note that the New Deal set up many public banking institutions, and you should look into that. Thank you very much for your time.
Thank you so much, Richard. We appreciate you calling in. Have a wonderful holiday. Madam Moderator, let's go to our next caller.
Our next call will come from the line of 119.
Good morning.
Good morning. Good morning. Hi, my name is Dawana Halabi, and I'm representing the Green Lending Institute. We strongly support the creation of a state public bank. Communities of color have been disproportionately denied access to capital from traditional banks, and more recently, entrepreneurs of color continue to bear a disproportionate impact of the pandemic. A state public bank is a critical step to building a more equitable economy that prioritizes the most marginalized in California. Thank you.
Thank you so much for calling in today. I want to remind folks, if you'd like to be able to participate in today's hearing, you can call us at 844-291-6364, 844-291-6364. We have over 24 folks who are currently in the queue at the moment. Let's go to our next caller. Madam Moderator.
Thank you, and that will be from 117.
Good morning. Good morning, line 117. You are in committee. All right, Madam Moderator, next caller, please.
Thank you. And the next one will come from line 104. Your line is open.
Good morning.
Thank you, Chairman. You're doing a great job running this meeting today. Thank you. This is Jeff calling from San Diego, home to Assembly powerhouse leaders like Senator Sueso and Atkins and Assembly members Gonzalez and Gloria, all of whom support public banking. My organization, Public Bank San Diego, of course, supports AB 310, and we're working very hard to help create a California State Public Bank. Thank you.
Hey, Jeff, thanks so much. Give the new mayor our very best. Happy Thanksgiving to you. Thanks for calling in. Let's go to our next caller, please, Madam Moderator.
Thank you, and that will be 127.
Yes, hello, this is Shelley Browning calling in from Santa Rosa. And first and foremost, Senator McGuire, I would like to thank you very much for holding this informational hearing today. I greatly appreciate it. I'm with Friends of Public Banking Santa Rosa and the California Public Banking Alliance, and I'm calling in staunch and solid support for a state public bank. Thank you.
Ms. Browning, it's good to hear your voice. Have a great Thanksgiving. Thank you so much for calling in. Let's go to our next caller, please, Madam Moderator.
Thank you. That would be 116.
Hello, my name is Bonnie Petty. I live in Santa Rosa, and I am a member of North Bay Jobs with Justice, as well as the Alliance for a Just Recovery. We strongly support the establishment of a California State Public Bank. I remind the senator and other senators, and in the meantime, thank you very much for this hearing. This has been a great hearing. I've been watching from the beginning. So I just remind us, we are recovering still from many fires, and as we look at the funds coming in from the PG&E settlement, I can only imagine how much we would have been able to leverage those funds much better had we already had a public bank in place for that. And with all due respect to Mrs. Yee, I have to say that her solution of just begging the big banks to do more is simply not a solution. Thank you very much.
Thank you so much for calling in, Bonnie. We appreciate it. Happy Thanksgiving to you, and thanks for hanging with us today. Let's go to our next caller, Madam Moderator.
Thank you, and that'll be 122.
Hello?
Hey, you're in. Good morning. You're in committee, caller. You're in committee. Good morning. The floor is yours.
Hello? Okay. I'm Wyan Trone with Mothers Out Front, mobilizing for a livable climate. Sonoma County Climate Activist Network, the Friends of Public Banking Santa Rosa, and the California Public Banking Alliance. I strongly support a public bank. I've been a supporter of public banking for 4 years. I do a lot on social media, and I'm planning to get as many groups and individuals around the Bay Area, from North Bay to South Bay and beyond, to endorse public banking. I look forward to publicizing the public banking bill when it is announced this spring. Public transit is in deep distress, and every transit agency is facing huge cuts, which will affect many low-income transit riders in being able to get to work and to get to essential services. Over 30% of transit riders are essential workers. The situation is extremely dire, as thousands of riders are being passed up every day due to social distancing requirements. People may lose their jobs as a result of this, and maybe even their housing. Riders will have increasing difficulty in getting to essential services. We need a public bank now to provide the entire state with additional funding. Thank you for holding this informational hearing.
Thank you so much for your comments. We appreciate you calling in today. Have a wonderful holiday. Let's go to our next caller, please, Madam Moderator.
Thank you. And that comes from the line of 26.
Good morning.
Good morning.
Thank you for holding the hearing, and I am fully in support of the public banking for California. It's really necessary because it's just super expensive for cities, and there's a lot of fraud that's already happened on Wall Street, and we need radical solutions right now in order to change, honestly, a state and a money system that is not working for the people. We need a public banking system because in 2011, there was a big municipal bond big rigging scandal where 4 huge banks got into a $673 million in settlements for the Attorney General. And Oakland got about $15 million during the London Interbank offered rate fixing, which is in 2012. So this is not a single incident. In Alabama, JP Morgan bribed $8.2 million to get $5 billion in county bonds. In LA, they spent $204 million in 1 year for Wall Street fees, which is bigger than their Bureau of Street Services spending department. Ultimately, we need to develop a new way to do banking that does not involve Wall Street, that supports CDFIs, that supports credit unions, and the public banking system is the only way to do that. The first comment made in this session was about how banks may not be viable because they don't make a profit. I'm sorry, but people should not be making profit off of the work of other people's backs. Wall Street is not the way to do this, and we need a new path forward. Thank you.
Thank you for your call. We appreciate it. Happy holidays to you. Let's go to our next caller, please, Madam Moderator.
Thank you. And that comes from the line of 110. Your line's open.
Thank you. This is Tom Conlon calling from Transition Sonoma Valley. We're a group of about 700 people committed to community resilience and addressing the crises of resource depletion, climate change, and financial instability. We were formed in 2010, shortly after the mortgage banking crisis, and we've long supported a public bank alternative to address the many gaps that exist in our existing banking system. I want to thank the Bowl legislators who have passed AB 857 and have brought us this far on a state public bank here in AB 310. I actually want to say, too, that I'm a bit disappointed at the defense of the status quo banking system today and some of the comments I heard that even at these historically low interest rates that we find that private underwriting infrastructure investments are still too expensive to satisfy California's needs. We simply don't have enough funding to meet all of our needs. I'm also disappointed at the false framing that pits the CDFIs against the public bank infrastructure, an expanded public bank infrastructure bank. We have a problem here in California. We have a progressive majority that knows that public banking is a viable solution, and we look to you legislators to fix this problem because, for example, me personally, I voted against Proposition 14, not because I'm against stem cell research, which we need to continue to invest in, but simply because we can't afford to continue to invest in a banking system which pays out way too much money to private sector banks. So I look forward to you guys fixing this problem, and I, again, appreciate the work that's gone into this committee and this hearing today. Thank you for consideration of my comments, and happy Thanksgiving to all.
Hey, thank you so much, Tom. Have a great Thanksgiving. We appreciate you calling in today from Sonoma Valley. Let's go to our next caller, please, Madam Moderator.
Thank you, and that'll come from the line of 125.
Hi, this is Tom Amato with the Oakmont Democratic Club here in Santa Rosa, California. We strongly support the formation of a state public bank. As I look out my window right now, I see damage from the last great California fire by my house, and we need to move our resources away from fossil fuels and into green energy, and a public bank can be a step in that direction. Thank you. Have a great Thanksgiving.
You too, sir. Thank you so much, Tom. Thanks for calling in today. Have a good one. We appreciate it. Let's go to our next caller.
Thank you. And that'll come from line 124.
Hi, my name is Sylvia Chi. I'm the Policy Director of APEN, Asian Pacific Environmental Network. We're an environmental justice organization working with Asian immigrant and refugee communities throughout California for over 25 years and working for a just transition to a regenerative economy. We're in strong support of continuing to explore the state public bank and how to solve the next set of challenges that have been identified in this hearing. And I think what we've heard today is that the scale of what we need is not being met by the current options. We need to create an alternative to the Wall Street-dominated public finance system we have now, which has resulted in disinvestment in low-income communities of color and underinvestment in the solutions we need to promote climate resilience. And this proposal for a state public bank is a critical step towards that. Thank you.
Thanks, Sylvia. Happy Thanksgiving to you. Appreciate you calling in today. Let's go to our next caller, please.
That'll come from the line of 101. Your line's open.
Good afternoon. My name is Paulina Gonzalez-Quito. I'm the Executive Director of the California Reinvestment Coalition. We have 300 community-based organizational members across the state who work with impacted frontline communities, and they receive investments that are mandated from the private market, such as from the Community Reinvestment Act, in order to help these communities. We've been trying private market solutions and public-private partnerships for a long time. But if this were enough, 30 to 40% of small businesses owned by people of color would not be closing during COVID, compared to 17% of white-owned small businesses. A state public bank must be a piece of the solution. It is people-centered and centered on frontline communities, and it is needed to help in this economic crisis now more than ever. Thank you so much. Happy Thanksgiving.
Hey, have a great Thanksgiving. Thank you for calling in today, for your comments. We appreciate it. Thank you so much. Let's go to our next caller, please, Madam Moderator.
Thank you. And that'll come from the line of 34.
Hello, my name is Terry Moon, and I'm with the Sonoma County Climate Activist Network. And I agree with Senator Durazo that, you know, this there's been a lot of fear mongering in a way with the banks talking about how are we going to be able to pull this off, but we won't need to pay millions of dollars for executive salaries for the banks the way that the big banks do. And also, you know, you're listening to the big banks. The big banks have been bailed out, 2 or 3 times by taxpayer dollars. And I think we're forgetting that California has a larger economy than most countries in this world. And we can do this as the people with our tax dollars. And the CDFIs are not working clearly, and I don't think it's likely to change, as others have said. And I also think it's suspicious, this timing of the IBank creation. Anyway, I believe that I strongly support a public banking, and I think that the climate crisis emergency that we are in is only going to require more and more funding, and especially the economic catastrophe that we're currently in with COVID, we really need the public banking in order to deal with these emergencies and to deal with them in a way that is fair and just and not focused on profits. Thank you, and appreciate the opportunity to share my opinion, and also have a wonderful Thanksgiving, everyone.
Terry, thank you so much for tuning in today. We appreciate your comments. Thank you for participating. Ladies and gentlemen of the committee, those who are holding online, I just want to do a quick time check. So we have to end this hearing at 1 o'clock. And then what happens at 1 o'clock is that they have to come in and clean the chambers, because then we have the health committee. So I'm going to keep going here for 2 minutes each participant up until 12:30. At 12:30, I'd like to be able to go to 1 minute per caller, just to make sure that we get through each of our calls, because we still have closing comments by Assemblymember Santiago, as well as Chair Bradford. So let's keep going, 2 minutes each up until 12:30. Then we're going to go to 1 minute each per caller to make sure that we get through each and every one of our calls. We look forward to hearing from you at 844-291-6000. 6364. Madam Moderator, let's go to our next caller, please.
Thank you. That'll come from line of 102.
Hi, my name is Maxwell Kessler. I'm just a citizen that lives in Los Angeles. I wanted to reiterate a lot of what I've heard today, in that it seems like we are supporting the arguments levied today, are supporting a financial institution that is just not working. And I understand that there are challenges to a public bank, but I don't find that the solutions are to continue to rely on these private institutions and their profits when they use their profits to prey upon communities, such as we saw Wells Fargo do in the fake bank account scandal, and their continued investment in the fossil fuel industry, which, wreaked havoc up at, the Northridge gas power plant a few years ago, and all the people mentioning the issues with fire. If we continue to rely on whether or not these financial institutions make profits and then provide money to the community development funds, then the community development funds are always going to be a step behind repairing the damage that they caused. So this just doesn't seem like a viable solution. And I understand that the public bank presents a lot of challenges, but I think it would be much more advantageous for us to discuss what those challenges are and come up with solutions to them, such as Senator Durazo was discussing, as opposed to just kind of encouraging us not to meet those challenges. Thank you for your time. Everyone have a happy Thanksgiving.
Appreciate that. Thank you so much, Maxwell. Thank you for joining us here today. Happy Thanksgiving to you. Let's go to our next caller. Madam Moderator.
Thank you, and that'll come from line 100.
Good morning. This is Laura Niche from Santa Rosa in beautiful Sonoma County, which is very well represented today. Thank you, Mike McGuire, for your representation of Sonoma County and the committee for your hard work on behalf of California. I'm on the steering committee of two county organizations, 350 Sonoma and the Alliance for a Just Recovery, which is a coalition of labor, environmental, and climate groups formed after the 2017 fires that devastated our community. Both of these organizations strongly support the formation and support of public banks. Thank you so much for your service, and happy holidays.
Hey, have a great Thanksgiving. Thank you so much for being with us today, for tuning in and for your comments. Thank you. Let's go to our next caller, please.
Thank you, and that'll come from line 56.
Good morning. Line 56, you're in committee.
Thank you, Senator McGuire and Chair Bradford. Steve Bertelbaugh with the Transportation and Land Use Coalition, also with the Alliance for Recovery. We look at public banking as a way to level the playing field. Profit should not be the main motivator for some projects, and we appreciate your holding the hearing today to figure out what the obstacles are to overcome. I'm sure you can do this. It's going to take time for this to take effect, so I would urge you to make progress this next year, pass the bill, get it to the governor's desk, and I hope the governor will sign it. Thank you.
Mr. Bertelbaugh, always good to hear your voice. Thank you so much, and thanks for all your work on behalf of transit as well. Happy holidays to you. Let's go to our next caller, please, Madam Moderator.
Thank you. That'll come from line 123.
Good afternoon. My name is Sherry Friedenrich. I'm a CPA and also the treasurer tax collector from the County of Orange. Thanks very much to Chairman McGuire and Bradford for having this informational hearing today. I was able to partake in or listen to most of it. My comments are related really to the funding of public banks. I know the discussion has been on the PMIA funds. I just want to echo the comments of the other elected officials that have been charged with state fiscal management, that the use of those funds is for needed operations and needs to maintain liquidity. Very important for them to not be at risk of loss. Our safety, liquidity, and then yield are so important to pay for all of those needed services. I want to thank Tina Vernon, the president of CACTAC, who spoke very eloquently on our comments from our association of 58 counties. I'd also like to thank John Moorlach. He has done a fabulous job up at the Senate. He continues to do a great job today with his comments, and I know and wish him the best of luck. He's really helped keep the state in perspective, and so I appreciate that, I'm not supporting those PMIA funds to go for public banks. Thank you again all. Please stay safe and have a happy Thanksgiving.
Thank you so much for taking time out of your busy schedule. It's wonderful to hear from you and for your service to the people of Orange County. Senator Moorlach says hi even as I speak, so thank you so much. Happy Thanksgiving to you as well. We're grateful that you called in. Ladies and gentlemen of committee, those who are on the line, we ask you to keep holding on the line. Because of our time, it is now reached 12:30. We're going to go to 1 minute each. 1 minute each for those who are holding on the line. There are 15 currently in the queue. We're going to ask for 1 minute public comment each individual. Then we're going to go to closing comments from Senator Bradford and, of course, Assemblymember Santiago. Next caller, please, Madam Moderator.
Thank you, and that will come from line 12.
This is James McFadden from Sonoma. I'm representing the Sonoma Valley Housing Group, and we are 100% in favor of public banking. Thank you, and have a happy Thanksgiving.
Thank you so much, James. Have a great Thanksgiving. We appreciate your call. Next caller, please.
That'll come from the line of 29.
Hello.
Hey.
Am I on?
How you doing? Yeah. Good afternoon. You're in committee.
Hello. Yes. Thank you. This is Sunny Galbraith. I'm a teacher in Sonoma County with 350 Sonoma and the Alliance for Just Recovery, and I also co-chair the Santa Rosa Junior College Climate Action Night. And Senator McGuire, thank you so much for supporting that event and meeting with students this summer over Zoom. We had groups of students working to support AB 857 and AB 310, and we're thrilled that you're holding this hearing, and we strongly support all the groups I'm part of and the students, the creation of a California public bank. For one of the reasons, to move resources away from banks that continue to fund fossil fuel extraction projects, and to really move money into our communities to help deal with the climate catastrophe and economic crises brought by COVID. So we really appreciate your support and your willingness to meet with students over the summer via Zoom. That was a huge thrill for them. Thank you.
No, thank you so much. Please give them my best. Had an absolute great time, and it's so impressive what you're doing at the Santa Rosa Junior College, and in particular the hard work of the students. Thank you for calling in, Sunny. It's good to hear from you. Have a great Thanksgiving. Let's go to our next caller.
Thank you, and that'll be 129.
Hi, my name is Stephen Daniels, and I am a student of environmental studies at CSU San Marcos, and I just wanted to call in to show my support for a public bank. I think it is an incredible idea. It is important we find ways to fund the solutions of tomorrow. And thank you for everybody who's putting this hearing on, and happy Thanksgiving.
Thank you so much, Stephen. You too. Have a good one. We appreciate you calling in today. Let's go to our next caller.
Thank you, and that'll come from line 25.
Good morning. I'm Jo Trubala with the California Reinvestment Coalition. Our members are affordable housing developers and providers and small business technical assistance providers and lenders. We have done the necessary work of holding Wall Street banks accountable for differential treatment at best and at worst, the kind of blatant racism that holds communities down for generations. Our members were on the front lines of rectifying this deep inequality in lending resulting from decades of redlining and disinvestment from Wall Street banks are in strong support of the establishment of the state bank. It is the only way we see economic development corporations and community-facing CDFIs actually having access to capital that would meet the needs in BIPOC communities. Please be reminded that this is a need that is deliberately created by intentional practices of Wall Street banks. We are hopeful that California, the most progressive state with one of the largest economies, will see to it that we begin the work of establishing infrastructure to ensure the economy is serving BIPOC communities overall. Thank you and happy Thanksgiving.
Have a great one. Thank you so much for your comments. We appreciate those today. Thank you for calling in. Let's go to our next caller, please.
That'll come from line 109.
Hi there. My name is Curtis Wu with the San Francisco Public Bank Coalition. As many of you know, SF has over a $12 billion budget, one of the top places for billionaires, yet still unable to find permanent funding sources for affordable housing, homelessness, public transit, infrastructure, and more. When we talk about the cost about a public bank, we never talk about the current cost of banking with Wall Street or the lost opportunity cost of not having a public bank. The Public Bank of North Dakota has had 15 plus years of record profits, most credit unions per capita in the country, and was able to provide the most PPP loans per worker per state in the country. So if North Dakota can do it, why not California? May I remind you that a lot of the stuff California is trying to fight for right now are popular in red states. Tennessee, Nebraska have public power. North Dakota has public banks. I think we need to stop looking at these as radical left things and actually looking at them as very common sense. Even if you don't care about any social justice issues, if you care about making money, public banking is the issue. I'll just end by saying profit and people are not actually mutually exclusive. It's which people are getting the profit, and public banks reallocate profit to the people who created it. We hope for your support. Thank you.
Thank you so much. Thanks for calling in today. Have a great holiday. Let's go to our next caller, please.
And that'll come from line 132.
Hi, my name's Christopher Lish. I'm living in Marin County, and I'm calling in strong support of the California State Bank. Thank you for holding this hearing today.
Thank you so much, Christopher. Have a great Thanksgiving. Appreciate you calling in. Let's go to our next caller, please.
That'll come from line of 54.
Oh, hi. Good afternoon, and thank you for holding this hearing. My name is Tracy Krusenberg, Alameda County. I'm calling on behalf of Open Privacy and Media Alliance. Both organizations are in support of a state public bank. Why do we need one? I think we've seen a perfect example from the recent Paycheck Protection Program. As we've all heard, small businesses throughout California that were desperate for funds couldn't get them. And the reason for that is that the big banks were taking care of their corporate clients. We need a bank that will prioritize the interests of the people. Thank you, and please try to find a way to come to yes on a California state public bank.
Thank you so much, Tracy. Thank you for calling in today. We appreciate your comments. Happy Thanksgiving to you. Let's go to our next caller.
Thank you, and that'll come from the line of 136.
Hello, 136. This is Henry Levy. I'm the Treasurer Tax Collector of Alameda County, and I just wanted to emphasize the things that our president of CACTAC said about a lot of the county treasurers are in support of the goals of the public bank. And another thing she said that you may remember, she said we collect money, we don't provide it. And we would like some tools to be able to provide, at least be in the discussion of providing it. Alameda County tried to invest in the California Rebuilding Fund, the IBank, and we couldn't find a way to do it. So as we go forward, if there's ways we can work together to allow the county treasurers to be involved with this, that would be great. Thanks very much.
Mr. Treasurer, Tax Collector, thank you for calling in today. We appreciate your service to the people of Alameda County and the state of California. Hope you have a great Thanksgiving. Let's go to our next caller, please.
Thank you, and that'll come from line of 140.
Hi, I just want to say, my name is Erica, and I'm a community member in Santa Cruz, and I want to say I strongly support public banking in California. And it's really clear that as one of the largest economies of the world, we can figure out a way. One way or another, we can figure out a way to have a California state public bank. Thank you.
Thank you so much for calling. Happy Thanksgiving. Let's go to our next caller.
And that'll come from 141.
Hi, this is Brett Garrett with the Santa Cruz Climate Action Network, and I'm also with People for Public Banking Central Coast. We strongly support a California state public bank. If the PMIA is not available to create a bank, we must explore other viable funding sources. I personally would support using PMIA, but other sources should also be considered. We must find solutions that benefit the public instead of depending on Wall Street banks that have inflicted so much harm on our communities and our environment. We also support CDFIs, which will have more resources available with a public bank than without. There's a painful irony when I hear talk of a CDFI relying on Wall Street for its funding. The CDFIs need public banks. When you talk of risk, people are suffering now. The environment is also suffering. These issues illustrate the profound risks of not having a public bank. So please support a public bank, a state public bank. Thank you.
Thank you for your comments. Have a great Thanksgiving. Let's go to our next caller, please.
Thank you, and that'll come from line 143.
Hello, my name is Sushil Jacob with the Lawyers Committee for Civil Rights of the San Francisco Bay Area. We're a co-sponsor of AB 310 and also we're co-sponsors of AB 857. We come to this issue from the lens of racial justice, working towards a public bank and a state public bank and a public banking system that will advance access to capital in rural and urban communities with a focus on communities of color. In these discussions, we should remember that California has already taken the first step towards such an institution with the IBank. Now it's time for us to take the next step and fully transform it into the state-level infrastructure bank. There's been much discussion about the Bank of North Dakota. One point is that while it is much smaller, the state of North Dakota is much smaller, their bank is punching far above its weight, having deployed $200 million in federal CARES Act dollars into the state's economy for small business lending. This is multiples more than what we were able to do with our IBank, but once it becomes a public bank, it could play a similar role. Thank you.
Thank you so much. We appreciate your phone call. Have a great Thanksgiving. Let's go to our next caller, please, Madam Moderator.
Thank you, and that'll come from line 145.
Hi, my name is Mike Turgeon, and I'm part of Friends of the Climate Action Plan in Santa Rosa, Sonoma County. Thank you, Senator McGuire, for holding this hearing and everyone who testified today. And it's primarily, if there's an idea that whose time has come, this is it. And so from a climate perspective, we just expect that having a public bank in the state would allow a more imaginative way to bring relief to communities like Santa Rosa who suffered so badly from the fires. Thank you so much.
Hey, thanks, Mike. Appreciate you calling in. Have a good Thanksgiving. Let's go to our next caller.
Thank you. That'll come from line 146.
Thank you. My name is Norman Ray. I'm representing Sonoma Valley Housing Group, which has been meeting weekly for the past 5 years. We strongly support a California state public bank. Thank you.
Thank you, Mr. Ray. Appreciate you calling in. Have a good Thanksgiving. Let's go to our next caller.
All right, thank you. And our last one in queue is from 147.
Hello, good afternoon. My name is Jackie Fielder. I'm the co-founder of the San Francisco Public Bank Coalition. Thank you, Senators, for holding this hearing today. Public bank is the future, and that's clear, especially coming from this pandemic and the economic downturn. It's also going to be the way that we build our stock of affordable housing. It's the way that we get to an economy of carbon-free economy. It's the way that our small businesses stay afloat and then bounce back after the pandemic. And it's also a way to build our public infrastructure. Thank you all, and please support AB 310.
Thank you so much, Ms. Fielder. Appreciate you calling in. Happy Thanksgiving to you. Madam Moderator, let's do a last call for those who would like to be able to participate via the telephone for public comment. Last call for the queue.
Last call for public comment. You may press 10. 10 for public comments. Okay, here comes a few more, and our next question will come from 117. Your line's open. Your line's open.
Did you call 93 or 193 yet?
You are live.
Yeah, go ahead, sir. We can hear you.
You're live in committee, sir. The floor is yours.
Yes, I would like to, my name is Stan Gold. I'm from Sonoma County. And I would like to thank Senator Moorlach for pointing something out. He called to our attention that we're 52 times or more than that larger than North Dakota. and so things wouldn't be applicable with us. Well, that's an advantage, not a disadvantage, because North Dakota public banking puts a great deal of money into their general fund every year. We could put 52 times that amount of money, things being equal, into the California general fund every year if we had public banking here. We the taxpayers, have a precious commodity, our taxes, and we give that money away to others to make profit out of that. We can use that money for ourselves. Those profits can pay for financing infrastructure,
30
affordable
seconds.
Housing, small business loans, renewable energy projects, disaster recovery, and so forth. So I would appreciate everything you guys can do to bring that forward. And as far as Betty Yee, begging Jamie Dimon for funds for for CDFI, I'm enormously disappointed in hearing her say that.
Stan, thank you so much for calling. Thank you, Stan, for calling in. Good to hear from you always. Have a great Thanksgiving, sir. We appreciate you hanging with us today. Let's go to our next caller, please.
Thank you. That'll come from 137.
Thank you. Hi, I'm Doug Norland, and I direct the Economic Policy Program at Friends of the Earth. We're an environmental and social justice organization with over 150,000 members and supporters in California, where we were founded, and over 2 million members nationwide. We strongly support a state public bank. As so many of the previous speakers have said, we must divest from Wall Street and the fossil fuel projects they support. We need to keep public funds here at the state and local level to fund sustainable, climate-resilient recovery. Thank you very much.
Thank you so much for your phone call. We appreciate you being here today. Happy Thanksgiving. Let's go to our next caller.
Thank you. That'll be 135.
135?
Yes, you may go ahead.
Oh, is it me?
Yes, it is, ma'am. You're in committee. Please proceed.
Oh, I am 135.
Hey, hot
wow,
day.
Isn't this interesting? It's been almost 4 years, Mike McGuire. I used to live in your district, and now I live in Sacramento County. I'm a displaced person from the Tubbs Fire. My name is Andrea Hedstrom. We've met before in person. I've been in your offices a number of times. And I have to say I'm a little bit befuddled by both the timing of this hearing and the content of this hearing. Well, I wouldn't in any way say that Wall Street banks are working. As a displaced person from the Tubbs Fire who is acutely aware of the fact that the government can't handle any aspect in California of what it's doing, I am shocked that anybody would think a state bank would be within the purview of what the state should be doing. From the corruption in the EDD and the corruption in the CPUC, every level we look at in California, the state cannot manage itself. And now you want to get into the business of banking? Call me crazy, but as a displaced person who has watched the systemic corruption with PG&E and you senators and assembly members greasing your palms with the blood money from PG&E, from the Deloitte corruption with EDD, I can't believe that you think you can get into the business of banking. Have you been to the DMV lately?
30 seconds.
You people cannot even run the DMV. And now you want to go into banking. But I will concur with the earlier caller who gave accolades to Senator Moorlach. He's the only one with any brains in that hearing, and it's interesting, he's one of the only ones physically in the room. The rest of you think you can zoom in. Well, I'll have this as a final message. Recall Newsom, fire the supermajority, and Moorlach for governor. I wish you
All right.
a happy
Thank you, ma'am, very much. Have a great Thanksgiving. Thank you. We have a Moorlach for Governor fan, and I just want to make sure that we are focused on why members are zooming in. We're in the middle of a pandemic, just like the federal government. The state government has remote hearings because we're in the middle of a pandemic. And it's important that senators continue to participate as they always have. That's their #1 goal, but that is why we're hosting remote hearings today. Happy Thanksgiving, ma'am. Thank you for your phone call. Let's go to our next caller, please.
Thank you. That'll come from 149.
Thank you. My name is Stephen Fleeka, and I'm a member of Public Bank San Diego and the California Public Banking Alliance. As a former banking professional, I fully recognize how flawed the notion that large Wall Street private banks are going to lead us out of our crisis, this current crisis, and be the necessary partners to address the inequities and other challenges our communities across California are experiencing. Let's not be deluded. These privately owned banks, their primary and fundamental operating focus is profit to shareholders. That profit often comes via the extraction of essential dollars from these very same communities. By contrast, a public bank's mandate begins and ends with the public's interest. And just to note, our prior caller, just as an aside, those very same big public banks that our municipal communities and state have partnerships with currently have paid hundreds of millions of dollars in fines for wrongdoing. So to end, I feel we have an opportunity, more so an obligation to seek bold solutions that put our fellow Californians' needs and priorities ahead of Wall Street profits. I fully support AB 310, and I look to my elected officials to challenge the status quo and move public banking forward in California. Thank you.
Thank you so much. We're very grateful. Thanks for calling in, and happy Thanksgiving to you. Let's go to our next caller.
Thank you, and that'll come from the line of 152.
Is that me?
Yes, it is. You're in committee, ma'am. Good morning. Good afternoon, actually.
Hi, good morning. Thank you. Thank you for holding this hearing today. I'm Georgia Kelly, the director of Praxis Peace Institute, a nonprofit organization in Sonoma. We have been holding forums and educating the public about public banks for the past 10 years, so I highly advocate for them. The advantages of having a state public bank in California would be more funds for renewable energy, affordable housing, and infrastructure repairs. I strongly support the use of our tax money to go for the people and businesses of our state instead of to Wall Street banks. So I am in support of AB 310. So thank you for holding the hearing again, and happy Thanksgiving to you all.
Hey, thank you so much, ma'am. You too. Happy Thanksgiving. We appreciate you calling in. Let's go to our next caller.
Thank you, and our next caller is 153.
Hi, my name's Anina Stoller, and I'm from Humboldt County, California, and I'm a community member. And I can see how the landscape is changing here due to the pandemic, and I think we need a state bank, a public bank, because of the smaller businesses needing low interest loans to get us through this time that we're going to have further shutdown, because basically restaurants and shops and bars are sort of the heart of our community to help support a lot of our community members who are artists and musicians who meet and greet people there and are able to make a living here in our unique community that's really geographically isolated. And I can already see how survival of the fittest is going to be really hard on our community, because the restaurants and bars that are popping up are all chains, and that's not going to be a space that our community members are going to be able to survive. And I thank you very much for giving me the opportunity to speak, and have a happy holiday.
Hey, thank you so much. I hope all is well in beautiful Humboldt County. We appreciate your phone call, and happy Thanksgiving to you. Ladies and gentlemen, that has concluded our public comment section of today's hearing. I apologize. We're at 12:54, and we still have to do closing comments. What we'd like to be able to do, if it works for folks, because we do have a hard out at 1 p.m., as we said at the very beginning, we'd like to be able to turn closing comments over first to Assemblymember Santiago, then we're going to go to Vice Chair Moorlach, then we're going to go to Chairman Bradford. So ladies and gentlemen, without further ado, we're going to turn it over to Assemblymember Santiago and say thank you, Assemblymember, for your partnership, for your hard work, and I know that you're going to answer some questions in these closing comments as well from senators. The floor is yours, sir.
Sure. Thank you very much. And in the interest of time, I'll be as brief as possible and trim down my 30-minute closing argument to a couple of minutes.
There we go.
So thank you very much. But I want to set the stage and thank folks who are on here, both participants, all of our panelists, for and opposing thoughts on the issue of a state public bank, because this is what happens when the legislative process works. You know, when we started off with doing municipal banks, there was a lot of questions, and ultimately we got a first in the nation to allow local municipalities to set up a public bank. One of the most progressive laws was able to occur because we had robust conversations through the legislature. I want to set off by saying that what we're debating before us is the creation of a state public bank. We did have legislation last session, and I want to echo that the legislative process works where we decided to continue it. But let me also make something clear that in the proposals that we're moving forward, we don't talk about using a PIMA funds. So I want to just correct that. And I think we've been pretty clear. If there was any doubt, let me say that there shouldn't be. So I want to table those arguments and put them aside. And that's part of because the legislative process works. And we heard the concerns about using those funds. Now, having said that, we will take into account the comments that were made during this hearing, and it's incredibly important. You did also hear about the rigorous process and the regulatory framework that was created in AB 857, which made it a very serious policy proposal. Nothing different than what we're proposing for a state public bank. This isn't an idea out of thin air. This is a serious policy proposal that will have a framework, a regulatory framework that will help to prevent risk, no different than any other banking entity available. And let's just face it, I mean, the current banking system is broken. We've seen great work from credit unions. We've seen great work from local community banks, but we haven't seen that at a greater scale. So we see the ability of a state public bank partnering up with CDFIs at a local level. We've seen the possibility. You could even envision a scenario where CARE Act dollars in the future are housed and leveraged with community banks and credit unions to do more local lending to small businesses. And I think if we were to talk to small business, there's a lot of lack and a lot of want in terms of needs that weren't available through big banks. I mean, that's the bottom line. And at the end of the day, I think there are better uses of taxpayer dollars. There are better uses of our state's dollars when it comes to helping small businesses, when it comes to helping the small farmers, when it comes to helping to build affordable housing, or just helping us out of this pandemic, or even during non-pandemic times. I think there needs to be a reimagining of how we do a banking system. So we look forward to having that conversation as we continue to move forward. I know there was a couple of treasurers who were opposed, but certainly there was treasurers like the ones in my own backyard and other areas of California who were very supportive of public banks. And it makes absolutely sense to answer the question. Does it make sense? It absolutely makes sense to create a banking system that puts people's needs and our community needs and our small business needs, our agricultural needs before the needs of profits and stakeholders. And I think that we have a good opportunity to create that here in the state of California. And what we're looking at is incremental change to create that public state bank. And we have a good framework for it. The IBank has done good work. I think it could do better work if it were to be California's state public banks. And I would challenge folks who are maybe are a little bit cautious about creating a state public bank, that I'm appreciative of the reasons why we can't do it. Let's reimagine that we could do it and tell us what it is and the path to getting there. Because I think there's great potential in having a financial institution in the state of California whose sole and primary goal, besides being fiduciary responsible, besides making sure that it pencils out, besides all those things that we would expect from any bank, and good regulatory framework to ensure that any of the concerns are brought at either risk or otherwise, that we have a banking system that prioritizes the well-being of Californians and California's economic system. And I think there's a real possibility here. We'll take all comments, all concerns, we'll treat them valid. But again, I want to say to to the chairs, both Mr. Bradford and Mr. McGuire and the treasurer and the controller and all the advocates for and against that have participated and those in between, that we want to create a serious policy proposal that addresses a lot of what's lacking in California's banking system. And we're going to take every comment serious. We're going to work towards it. But I think its time has come. We've now seen proposals at the national level from representatives in New York and otherwise who are looking towards changing that system. We're seeing proposals all across the country. I think it's inevitable that California leads with a solid proposal that helps us to create a state bank that can help support the work of community banks, credit unions, and helps support the work of future municipal public banks. So with that in mind, I want to thank all the senators who have participated. It's unprecedented in a lot of ways. The Senate committees would come together to hold a hearing on an issue, not a bill. I want to be very clear about that. So we heard everybody very loud and clear about PMIA funds, but that's not what we're talking about here today. So I just want to say that again in emphasis. And Mr. Chair, unless you have any further questions, Mr. Chairs, if you have any further questions of me, I want to thank you for your robust participation and include you and all others who have been on this call. Mr. Chiu, who I've not given enough thanks to, and also the controller and the treasurer, that we're all, Mr. Bradford, that we're all partners in creating a framework for a California state public bank. So thank you very much, and I appreciate your hard work. Thank you.
Assemblymember, thank you for your partnership, and this was critical. We made a commitment to the Assemblymember Santiago, Assemblymember Chiu, early in the fall that we would follow up on this hearing. It was critical to the Assembly members, to the coalition who is supporting this important issue as well, and I just want to say thank you. Assemblymember Santiago and Assemblymember Chiu have been nothing but gentlemen throughout this process, collaborative as well, and we greatly appreciate the partnership. Ladies and gentlemen of committee, we're going to turn it over to the Vice Chair for closing comments. Then we're going to finish it up with Chair Bradford. Mr. Vice Chair, please.
Thank you, Mr. Chair. I just want to make a couple of observations. One was a comment that I wrote down listening to the public. Profit should not be the main motivator, yet that's the free market underpinning. Risk takers do so for profits and they pay income taxes accordingly. And so I'm concerned as a legislator that the state has a style drift, that government does not have to do everything that would address a perceived need. And so we should proceed with caution. If banks are villains, which has been stated a few times, then regulators, which are a government arm, may be a part of the problem. Maybe that needs to be reevaluated. So my farewell recommendation would be that the state capital should stick to the core business of government. And with that, Mr. Chair, California has a glorious history of banking. Harris Newmark, a store owner in Los Angeles, had the only safe in town. In fact, the treasurer tax collector for LA County used his safe. And his nephew, Casper Cohn, would be the security system. He slept on the first floor of the store and watched the safe all night long. But he would found a bank himself. We know it today as Union Bank. And Isaiah W. Hellman, a wonderful Los Angeles immigrant as well, founded Farmers and Merchants Bank, the first original. And then he went off to go to San Francisco to be the president of Wells Fargo at that time in the late 1800s. So we have a glorious history. And as a California history buff, I just want to say thank you for 6 amazing years of being able to serve in the capital of California. This has been a thrill and has been an honor to work with each and every one of you. Thank you very much.
Senator Moorlach, thank you for your service, sir. I know it is not done. We are grateful to have an opportunity to work with you, sir. Happy Thanksgiving to you and your family, and look forward to working with you here in the months and years to come. Thank you, Mr. Vice Chair. Very grateful, sir. Let's turn it over to our partner in this initiative. Senator Bradford, we so appreciate working with you each and every day. Mr. Chair, the floor is yours.
Thank you, Chair McGuire, and I appreciate your effort in putting this hearing together, a joint hearing of governance and finance and banking and financial institutions. I think if there's one takeaway we'll leave with today, that there's a need. It has clearly been articulated that there is a need. The only issue is what method and how do we go about filling that need or serving that need. But the need clearly exists. And I too have concerns as to the role that the state continues to play in areas that should be handled by our, private entities, but many of our private entities are failing us, and that's why the government has to fill the lurch or the gap and step in when our private industries don't do their part. I hope that our banks are listening and hear that there is a large population that is not being served. They're either unbanked or underbanked. And we have these discussions again because there is a population out there that needs resources that they can't access through traditional channels. And we have to find a way to serve that population, regardless of who they are. And there is a need. And I did a bill a number of years ago trying to create banking districts similar to what they were doing in New York. Because again, we saw there were, I think, 3 million Californians that have no bank account. And again, so whether it's through a public banking system, whether it's through the IBank, whether it's from CDFIs, I think the state does have a role to play here. And I think we've heard the marching orders from many individuals, and we want to thank all the panelists for their great information, our treasurer, our controller, who've raised a lot of concerns, but also provided a lot of good suggestions as to how we address this issue. But I think we know that there's still much work to be done in this area. I want to thank my colleague, Senator Moorlach, for his expertise throughout his tenure here in the Senate, and I will heed his advice clearly as it relates to dealing with finances, because I am not a CPA, so I have to respect those folks who have earned a living and was a tax assessor and a controller, so county assessor, so he speaks from experience and from real life, and many times we in government want to be experts in all areas, and we have to respect those who have that expertise. So I appreciate that. And again, Chairman McGuire, thank you for your leadership here of assembling this hearing today, and all of my colleagues who, whether here in person or remotely, for your input and your participation. And I have no doubt as we start the new year, this will be one of the topics that will go forward, and we should roll up our sleeves and find a way to address it. So thank you for this opportunity.
Thank you so much, Mr. Chair. Chairman Bradford, we are so appreciative. Chairman Bradford from the Banking and Financial Institutions Committee, our partner in this hearing. We could not do it without you, sir. Thank you. Ladies and gentlemen of committee, we want to take a last moment to say thank you to all of our panelists for taking the time out of your busy schedules on this critical week. I want to acknowledge Mr. Grinnell, the Chief Consultant for Governance and Finance, for all of his hard work on this hearing today, as well as Ms. Newhall as well. Thank you, both of you, for the partnership from also banking and financial institutions. We are so appreciative to both teams for coming together to be able to get today's job done. I think the bottom line for us is this is an issue that deserves our attention and the necessary hard work to wrestle with the complexities that it exists. Know that there is much more work to come here in 2021 on behalf of both committees, the Senate Committees on Governance and Finance and Banking and Financial Institutions. We hope you have a wonderful Thanksgiving. Stay safe, and we look forward to working with you here in the new year. Ladies and gentlemen, this joint informational hearing is now adjourned.